Hey guys, welcome. I'm really looking forward to this one. If you're talking about someone that I've always thought, wow, this guy just seems to get it. There's real understanding on the tech side, but there's that real fundamental understanding of where we are at a macroeconomic tipping point, how that translates, and then right down into the cryptos, all the core areas around which cryptos could be serving as our future currency, from store value, various other aspects, transaction, etc. And then understanding the differences of individual projects. If I wanted to get a little bit of a heads up learning, sometimes some of it flying completely over my head, but he also breaks down many of the aspects very, very practically. It's Richard Hart. Richard, very glad to have you on. Also founder of Hex, I must say, and you'll probably hear a little bit about that as we give him opportunity to describe. But Richard, great to have you on. Thanks for coming.
My pleasure to be here. I
Excellent.
spent a long time trading. It's nice to talk to traders.
Oh, yes. Oh, yes. But as someone...
It's like being in battle or war. Normal people don't understand the strife.
Exactly. You're 100% right, and you will have a trader audience, but you're going to get a lot of other longer term investors. Generally, we kind of detone the activity element. Most activity we consider not to be overly productive. And it's a point I think you're at one with me, because you point out that I was watching some of your material as well. Most people don't add value. Actually, hodlers for most people often turns out better. And our big challenge is make 1, 2, maybe 3 decisions in a year to get that better return than the person who eats the 65% in the last 2-week dip in the COVID period for Bitcoin, for example, or the bear market. What's your take on that? Are you pretty aligned?
I mean, it's very simple math if you want to do it. And there is a little selection bias here. There's a little survivorship bias. If you had bought Bitcoin and then turned it into Ethereum at the crowd sale, and then held it until EOS launched and turned it into EOS at the crowd sale, you'd have billions of dollars, almost no matter what you put in. That's how large the multiples were.
Yeah.
So, and then if you had taken your money from EOS and put it into Hex, you'd be a multi-billionaire. So I am popularizing. I'm doing a lot of things that no one else does in the space, and I'm changing the space through better sound bites, basically through thought leadership. So I speak in multiples. I speak in X, and I'm the only guy that does that. When I was first in Bitcoin, I got in early 2011. I bought the top, about the $30 top, helped make the top, held it down to $1.
Yeah.
Went all the way up to 1300, held it, right? And then you just keep, it went down to 266, went up to 20K. I actually predicted the 20K top about 3 or 4 months earlier when it was 3 or 4K. I also called the multi-year bear market at 9,500. You know, I also said close your shorts and at least be in spot around 4K. Might have been earlier, maybe like 3,800, something like that. So my track record, and I don't delete calls. Everything I've ever said, it sticks. So you can go back. I have a calls channel, which I mostly just do Hex things on it now because it's the only thing that's exciting on the price chart. T.me/Richard's calls. So if you care about multiples, how many X is Bitcoin up from a penny? Now, it used to trade less than a penny, but I'm being favorable and being reasonable and just saying a penny. It's up 1.3 million X right now. And who's outperforming that? Nobody. And Ethereum did a 10,000 X from 15 cents to $1,500 in Kraken in 2.5 years.
Yeah.
And that's with buy and hold, no leverage, can't get liquidated, minimal fees, you don't have to stay up late at night. Now imagine how well you did in those things, but you didn't get paid extra coins. Imagine if you had something that while it was going up, you were making interest for holding it as well. So you were not only, so if you made 25% APY in a year and you held for a year and it went up 10,000X, well, now you're up 12,500X because you got 25% more coins. It's just amazing. Like, so this compounding interest, it's something that's really changing the game.
It is. And it doesn't have to be a lot of decisions that you make. It just has to be a few high quality ones. And I think that's the key thing. When we talk about trading, sometimes people think of those 9 screens, 14-hour days coming out of there thrashed, and half the time you've not paid any bills.
Whipsawed, and like you'll get whipsawed, buy tops, sell bottoms, bottoms, buy tops. You'll advance, like if you go to the casino and you play more hands at the the blackjack table, you're multiplying the house's advantage against you.
Yeah.
So the reason the most profitable exchanges in the world are margin trading exchanges is because they're pleb retail guys that show up there with their bags.
Yeah.
In order for them to lose all their money at 1x margin, they've got to trade that over and over and over again. But if you let them trade 100 times larger position by letting them ramp up and scale up the leverage, you increase exponentially the rate at which they get liquidated. You increase the fees that they pay because you pay an extra premium fee on liquidation.
Yeah.
And it's a way to...
And you charge them for borrowing as well, which essentially they're doing. So they become a client that's perpetually taking loans from you just on keeping their position open. So the carry cost goes up immensely as too.
Yeah, but that benefits most of these systems. That doesn't benefit the platform. That benefits the traders on the other side of the trade. So
sure.
It may be in Forex, the exchange houses are harvesting that more, but in crypto, that funding premium you pay is just going to the trader on the other side of the trade.
Balanced by another party and trade. I mean, this was just to highlight your point. We're doing a kind of history redux of big moves since crypto started. I remember that Ethereum move. I was a bit later, significantly later to you, but you'll remember this like it was yesterday. We like the big squeeze events in terms of...
I know about your HVF method. I've seen you draw your charts.
Yeah, that's right. And that big break, that was everybody loading up in 2000. I remember I was in Consensus in New York, and Ethereum was just absolutely starting this journey up. And then we got that huge gift. And this was overperformance because it was the first of its scale that you got. And then, of course, it was all fundamentally, you'd explain it as everybody and the likes of EOS, which you've already mentioned, gearing up for the ICO on the ETH platform. And that then led to, as much as you overperform on the one side, you got this massive underperformance on the other side. And whilst we shorted Ripple, we also shorted ETH during this period because there was so much that had to get unwound. That was the fluff.
Well, hey, I mean, blow off tops, you're going to retrace 80% of the move every time.
Yeah.
The thing about crypto is it's like, in the run up from 266 to 20,000, there was like 5 or 6 40% dips.
Yeah.
And when you're in that dip, you think it's over.
Yeah.
So when China's like, yeah, we're banning Bitcoin, 40% dip.
I remember that. Mm.
Yeah, there was actually a head and shoulders at the 5,000 mark that took you back down on Bitcoin to the 3,000. You traded 2 999s. Yeah. That was a horrendous sell-off during that period. The segue to this is that, as I'm mentioning, that this particular setup on Ethereum that you and I quite remember now, in essence, Bitcoin is in a far larger, first ever macro continuation that should bode exceedingly well for crypto as an overall category, generally.
We got the same macro now we had in 2011 when it launched. They're just printing and bailing out everything. So it's a great. I mean, Paul Tudor Jones put it well in that when they're going to try and print their way out and inflate, the thing that's going to go up the most is that thing. You know, it's got a low enough liquidity. It's got enough new participants that don't already have exposure yet. I mean, think about it from the macro perspective. We just had an Indian bank launch an exchange. DBS is the biggest bank in Singapore. And Singapore is a very, very wealthy country with very, very high IQ people. When you go there, the books that you see on the front of every store are self-help and business books. They're not like fiction. It's a very badass culture over there.
Yeah.
So DBS launching a crypto exchange is a huge deal. PayPal allowing the purchase and deposit and use of crypto. Short term, big deal. Midterm, if people start selling crypto via that method, a little bit bearish for price. Then after everyone's satiated and spent what they wanted to, long term it can pick up again. But all that can be canceled out just by more billionaires deciding to hop in. You know,
Correct.
Like this Michael Saylor guy bought his bag of like 250 million. Well, I mean, in Bitcoin, 250 million isn't much, but it's something. And if you can get more guys like that, it can help make up for plebs selling for, fun stuff on PayPal. Can't get
Where would you draw this pink line? I've just scribbled a normal curve in terms of adoption, because you make a very valid point. Even with, say, PayPal, initially you stock up and the price goes up. Then it's kind of a couple of people start to sell and you have that lull. But given where we are in the normal curve, which I'm expecting you'll say is to the left here somewhere, it's just the matter of degree in terms of where early adoption is the left and the median point of accept.
You can't use crypto for anything. Are you kidding? Nobody has a crypto wallet. If you go outside and you yell as loud as you can, $5,000 to the first person to show me their crypto wallet, you'll just be sitting there yelling all day because no one's got a wallet. You can't use it anywhere. It's slow. It's expensive. It's like crypto mostly is garbage except for the price appreciation, which is the best that's ever existed of anything in the world ever. So that's good enough for me. It's just like Berkshire Hathaway stock. Can you buy coffee with Berkshire Hathaway stock? Nope. Can you buy a Lamborghini with Berkshire Hathaway stock? No. But can you make 20% a year for 50 years? Yeah. Okay, well that's enough. Then sell it, or get a loan against it so you don't have to get hit with capital gains tax, and like it's just better. Store of value is a vastly superior use case to transactions. See, the only thing that affects the price chart is buying and selling. And when you have transactions, some guy wants to buy, he moves the price up a little bit, sends it to a retailer, then that guy sells for real money, and then it goes boop, boop. And what you end up with is the only actual price movement that occurs from use and payments is the latency, the lag, the float, the time in between buys and sells creates virtual demand. But if you could just instead have people only buy and never sell, guess what happens to the price? I know because I built something that does that, and the average stake length is 4.3 years. So if your average is 4.3 years, that means that like half the people are doing 10-year stakes. What do you think happens to an asset that people buy and they don't sell? It skyrockets. It's insane. Yeah. The people think they understand cryptocurrency markets, but they really don't. So most people think that if your cryptocurrency is used for payments, that's the end game. That's the goal. That's what's amazing. In fact, payments sucks. So with payments, we already know what they're worth because MasterCard and Visa and PayPal exist and they have market caps. And if you add them up, they add up to 10 times less than gold. And what is gold? It just sits there to store value. So why are stores of value worth more than transactional systems? So the price of a thing just cares about buying and selling. So let's take a transactional system like Bitcoin. You buy some Bitcoin, you buy a Lamborghini with it, the Lamborghini dealer sells it for real money to pay the manufacturer and buy a house. Price goes up, price goes down. And then all that's left is the float that comes from the latency, which is the time between the buys and the sells. So, okay, price goes up, price goes down. Now let's try another example. You love Bitcoin as a store of value. And so instead you buy it and you never sell it. You just keep holding it. Guess what happens? The price never goes down. It's really that simple. So if you understand economic theory, the velocity of money, the faster money moves, the easier it is to get a hold of, the less valuable it is because it's easier to get a hold of. When you reduce the velocity, which is what time deposits do, so there's $7 trillion in time deposits, there's $5 trillion in printed money. So it's a larger market than printed money. And these are the United States and China combined. When you slow down the velocity by getting people to lock up their funds, longer lockups pay you 20% interest more per year, basically. Then the money becomes more valuable because it's harder to get because the money that's locked there isn't on the market available.
You're creating a scarcity by entrapping certain amounts for at least a certain amount of time.
And it's beautiful because all of personal development is choosing the long term over the short term.
Yes, it's the marshmallow experiment. The kids, for the guys that don't know it, which children could resist not eating the marshmallow on the basis of 2 tomorrow? And they were the most successful in life.
So if you want to see the banksters of the world get replaced and you want to see the middlemen get replaced, then you have to replace all their products. And so Bitcoin was the first attempt to replace currency. Failed entirely, but ended up doing something more valuable. Store of value is more valuable than transactions. So we got lucky there. Great. What else do you need to do to get the banksters out? Well, what's the second most popular product at the bank? Time deposits. Okay. Well, who's the blockchain time deposit that pays you higher interest for locking up longer? someone had to invent it. So I invented it. So it's number 10 market cap now.
Yeah.
Let's just, you just pointed out Hex was number 10. Sorry to interrupt your flow. For many people that use CoinMarketCap, let's just segue into this. I'll say goodbye to my beautiful normal chart draw. We'll come back to that as well. I was using CoinMarketCap, but Richard's possibly encouraged me to look elsewhere. Many people won't see Hex at all on here. Whilst actually, if we go to Nomics,
they show the market cap correctly. They just force it onto the third page. So
if I go down,
yeah, so if you type Hex on CoinMarketCap, you can go look at the chart and it's there, and you can look at the trading volume and all that stuff. But they just don't show it in the normal ranks. So cryptocurrency listings are actually collusional and corrupt as shit.
It says rank 201. On what basis are they justifying that?
Manually. Look at the chart. It's like Hex has had 100% uptime with 2 security audits, 1 economics audit. $3 billion of Bitcoin holders have used their private keys to mint Hex in the contract. You can't possibly get more product market fit than we have. You can't get more security. You can't get a better domain name, hex.com, 3-letter dictionary. You can't get a better logo. We have ads everywhere, all over the UK, magazines, The Economist magazine, Car and Driver, you name it, right? Hex has got every single thing that you could possibly want, and verifiable on-chain volume where you could see who's buying, what else they hold, how long they've held it, whether they made money, whether they lost money, whether they've got a margin position open. It's all verifiable on-chain. But if they want to fuck you and just put you on page 3, they can. And so if you go to
what are they measuring? What are they measuring? Where's the deception or the aspect that's being missed? Seeing as we've come to this, what are they measuring that has you at 201? That these guys on nomics.com are measuring that has you at number 10 after?
Oh, it's not a measurement. It's not a measurement. They're literally manually just forcing it to occur that way. So they have a secret rule. What they tell you when you ask them.
But I just thought market cap simple. It's the number of coins in issue times by the price. Where's the haggle factor coming in there?
Exactly.
Okay.
So my theory is they want to stop scams from pretending they have high market caps. Fine, I get that. We're not a scam. We're amazing. Like, we can't possibly do more things to prove that. There's no extra more things to do. So they just look bad. Everyone else has got the ranking right. If you go to Coin Paprika, we're like top 15. If you go to Nomics, we're top 10. If you go to TradingView, we're top 10. If you go on Etherscan, it shows a $3 billion market cap. This stuff is obviously correct, but I don't know. Maybe some people don't like how cocky I am. Maybe it's a personal thing. Maybe they don't like me personally. But that's not fair to the tens of thousands of people that have invested millions of dollars in the Hex.
One thing I've certainly found is that it seems the attachment of an individual or in a character to any one particular coin long term seems to be fatal. If you look at Craig Wright on BSV, if you look for a period, Roger Ver was the face of Bitcoin Cash prior to the fork and still post, and it just seems.
I'm lows for BCH, by the way, on the BTC pair.
Yeah, and you look at Bitcoin, there's no one person that represents Bitcoin in essence.
Everyone's leaving it because it's dead technology.
So talk to me about that, because one of the things that was really interesting is when Simon was chatting with you, he's probably, well, not to mischaracterize him in a simplistic sense, but he's probably a Bitcoin maximalist. We don't marry anything. We're Bitcoin dominant now by bias from a trading and investment point of view because of the liquidity and the relative overperformance to...
No one needs liquidity.
Well, let's come back to that point, but just relative to, say, Ethereum. Technically, this is the relationship is one where we have been expecting downside. So for now, it's a Bitcoin bias. But a lot of people talk about the costs and various other things. I want to give you that voice to pick Bitcoin apart for its failings and what it's done well. So, and maybe we'll do that for the top 10 coins. So you have a chance to throw some stones, to highlight something good, something bad. Many people will be fanboys, so they'll hate it when you pick on their coin. That's okay. The mature people understand this is a fundamental critique by someone who's smart enough to launch his own token, has a very good understanding of the thing, where the guy's going wrong and where they've done a few good things. Bitcoin, fire away.
So Bitcoin has the largest liquidity, which is very useful to you if you want to buy a couple $100 million of it, because people don't understand how trading actually works. When you enter a position, you slide the market against yourself. And now you're looking at the price and you think that's your profit, but that's not your profit. Your profit is after you have to slide the price against yourself again to get out. Now, can you counteract those things? Yes, you can use OTC trading and sit the bid or sit the ask as a maker, or rather as a maker instead of a taker, and even get paid a premium to do so. Or you could, scale in and scale out of positions where you're not worried about the slippage because you're the maker, right? So you're like entering a temporary market maker position, but leaving the other side empty so that you end up in a positional trade where you're like accumulating one way or another way. Most people don't do that. Most people FOMO market buy. They love buying tops. They love selling bottoms. It's the human psychology. It's what humans do.
We say, just on that point, to sidebar you, the people who buy with limits win and the people who buy at market lose, long run. And it's one of the first things to do, stamp out all market orders. Anyway, sorry, carry on.
Yeah. And the funny thing is, it's like, how long is it going to take to get that half tick to come down to you? And then you don't pay 0.075, you get paid a rebate of 0.025. It's like, it's just... I mean, there's a lot of art to it, right? So there's a lot of art to it because you have to click post order only, or else when you set your limit, it'll execute as a market if it could be filled at that time. So there's little tricks that you need to use.
Sophistication, but let's go. Bitcoin liquidity and building big positions.
You can't make any money on it. Everyone thinks that volume is good and everyone thinks that liquidity is good, and they're both entirely wrong. What makes you money and what makes you rich is the price, because the price fills your orders. The price will fill your bids. The price will fill your asks. The price will make you rich. The only people that make rich on volume are market makers, exchanges, and now liquidity providers, which are just another form of market maker that's automated. That's it. Those are the only people that make money on volume. Normal retail traders make money on price, period. Price is what matters. Same with market cap. You can't make money on market cap. You can't place orders on the market cap chart. You can't place orders on the volume chart, but you can place orders on the price chart. So price is king, and all this other like bragging, like, yeah, we're ranked 10, but it doesn't mean anything. What matters is the price chart, So what Bitcoin's done well, the most common vulnerability in all cryptocurrencies is called the inflation bug. Doesn't sound that bad. What's a little inflation? What it really means is anybody can mint as many free coins as they want and destroy everything. That's what inflation bug really means. Bitcoin's had two of them. In 2010, they had to roll the chain back because someone printed an extra 6 billion coins. Limit's supposed to be 21 million. Oops, rolled the chain back. Happened again only a year and a half ago. A Bitcoin Cash developer, who's not a fan of Bitcoin, he's on his own thing. A Bitcoin Cash developer discovered you could mint as many free Bitcoin as you wanted. And he responsibly disclosed it to the core team. And what did the core team do? Oh, we've got a denial of service bug. No big deal. Oh, shit. Actually, we've got a fucking mint as many free coins as you want bug. And then they patch it real quick. And then they publish. They're like, oh, by the way, guys, you know that DDoS bug we were telling you about? Actually, that was mint as many free coins as you want bug. No big deal. That shit's happened twice. Now, why does that keep happening in Bitcoin? Because it's spaghetti code. It's not well-designed code. It has no modularity in it. It doesn't even have a spec that you could write to. If you want to write your own Bitcoin client, you can't, because there's no spec to write to.
Can I interject there? Because this is fascinating. A lot of what people hear was that, Bitcoin, it was almost an NSA construct from the 96 paper, et cetera, et cetera. The code is written so brilliantly, it's almost as if an AI did it. So whenever I'm hearing things that are sounding diametrically opposed, and we might be slaying a dragon or it's under question, I'll just...
The original Bitcoin client had a poker client in it. There's remnants. If you go back into the GitHub and look at the oldest Bitcoin clients, first of all, you couldn't even run the Bitcoin client in an open source software. You could only run it on Windows. Does that sound NSA to you? That it only runs on Windows? Second, it had parts of a marketplace and parts of a poker client in it. Like I could go down the list. Like there's no.
Explain to me poker clients, because that's something that just
He wanted you to be able to use Bitcoin to play poker, so they were going to have the Bitcoin client also allow you to play poker.
Right.
The code is there.
And that was designed. It was inceptionally designed as such. Yeah. So okay.
Hey, you want to know something else? Satoshi didn't put the fucking inflation rate in the white paper. It's not there. The halvening, the fact we'll cut the inflation rate in half every 4 years, not in the white paper. Isn't that funny? There's a lot of things people don't understand about Bitcoin.
Okay.
Hold on a second.
So when did these additional aspects get added, and who was the author? Because what we're actually saying is we kind of understood there's no one person behind it, but if we just leave that, that's clearly been amended and addended since. So it's kind of like the Bible. Everyone's had a crack of adding a translation or two into a different language. When did these other elements come in, by your best understanding? The halvenings, for example.
Well, I mean, those were built into. So people don't understand Bitcoin. When Bitcoin, the white paper came out, the code was already written. So he didn't write the white paper and then decide to then make code that met that spec. He wrote the code first to make sure it would work, and then he released the white paper. So it's funny, like a guy like Craig Wright says, oh, I'm Satoshi. He can't even code. He's not a developer. What? Like, what are you talking about, dude? Doesn't make any sense. So what else is wrong with Bitcoin?
So actually, we're talking about the wrong. Let's just summarize, because we're having so many interesting sidebars. It's also staying difficult to track. So in essence, it was designed to be finite, which is good. We're saying liquidity-wise, it's not bad, but there was a couple of counterpoints on that. We're saying it's actually had a security fail. At what level was that? It's not blockchain, it's the token itself. Explain also.
Because the blockchain
anyone could have minted as many free Bitcoin as they wanted a year and a half ago. Yeah. But the guy that found that vulnerability first told the devs about it instead of using it. It's really that simple. Yeah. And you'll have these bugs again because the code is not audited. There's been no security audit of the code. The coin I built, we've got 2 security audits and 1 economics audit. Bitcoin has none. The substrate that we execute our logic through, the Ethereum substrate, has had 0 inflation bugs. Bitcoin's had 2.
So the inflation bug, explain the inflation bug. So this is where people essentially can
mint as many free Bitcoin as you want out of thin air.
Yeah. So that wasn't something of design. That was a flaw that people found where someone could get in and hack, basically. A hack vulnerability in a certain area. Yeah.
You're just like, hey, you know what? I've got 1 million Bitcoin now, and just spend them. And this happens all the time. Let me give you a list of coins that have had inflation bugs. Monero, XLM, Ravencoin. They minted 5% just about 6 months ago, sold it right on the market. Bitcoin, Bytecoin, it's the most common vulnerability imaginable in crypto. Hex doesn't have those. Why? Because our consensus code that controls our inflation is locked in a smart contract, cannot be edited, cannot be changed. And then when people go to improve the network and make things better, they don't accidentally screw up the most important thing. So Bitcoin doesn't have that. When you go to make the network code faster, that's how that inflation bug got introduced. They were improving a networking stack for latency, and then accidentally, now anyone can mint as many free Bitcoin as they want.
Yeah.
Because it's spaghetti code. Furthermore, have you had a block size increase? Why not? Computers are faster, hard drives are faster, everything's faster. Why wouldn't you get a block size increase to bring fees down? Because it's a dysfunctional system. Do you have anonymity? Do you have privacy? No. Do you have smart contracts? No. Do you have stable coins? No. Do you have, what do you got? You got nothing. The only people that ever found any scale using the Bitcoin network for programmable money was Tether, when they used to use the Omni protocol on Bitcoin, and it sucked so bad they left. And now they do most of their transactions as ERC20 on Ethereum because it's a better network. You want to do a 13-second transaction in Bitcoin? You can't. Well, Ethereum's got 13-second blocks. So you can do 13-second transactions all day. Go to your exchange, click deposit. See how long it takes to deposit Bitcoin. See how long it takes to deposit Ethereum. It's literally faster.
Yeah, it is that I've found for myself. Yeah, we all know of that. So speed is down. Security is questionable. It's been caught on the inflation bug a number of times. That's pretty fatal, isn't it? Because I mean, imagine the Bitcoin Cash guy, the Bitcoin Cash dev that actually turned out a white hat. I mean, he could have destroyed the single biggest crypto market cap right there with a malicious.
All the other cryptos would die with it in the short term.
Yeah, it would be destructive for the industry. It's almost too big a nuke to hit.
Someone should offer a bounty someone should get the Bitcoin code security audited. It would cost a few $100,000. It's well worth it. And no one's doing it because of the tragedy of the commons. So maybe one day I'll set up a crowdfund and see if someone wants to do it. I mean, I'd chip in because I don't care what coin you own. If Bitcoin fails, it's bad for everybody.
100%, and that's quite a mature response. We don't need everyone else to fail for us to win, and in that sense, I respect you for that response.
Who's a screwdriver maximalist? Are you like a flathead maximalist or a Phillips head maximalist? You have tools. The tools serve functions. You don't need to like worship one tool and try and make it fit everywhere. Bitcoin is not designed to do time deposits. Hex is. Bitcoin is not designed to do smart contracts. Ethereum is. Bitcoin is not designed to do stable coins. DAI is. Bitcoin's not designed to do anonymity. Monero is. We could go through the list. You use the right tool for the job. Maximalism is very stupid. Very, very stupid.
No, I've always agreed with that, with the Bitcoin maximalist. I've always said there's very unlikely that there'll be the one coin because there's so many different elements that have to be catered for. You mentioned security, and for me, that's one that's made immediate sense. I think the Monero guys like to paraphrase, you write everybody who does the transaction on the back of the Bitcoin note. And then you can have Johnny Hitman just iced Joe Soap for X amount on the note, and that gets passed to you. And that therefore undermines immensely the potential perceived value of that money because it's had dirty deeds. It might be... Fungibility is the phrase that most people don't fully understand, but it's is what I'm referring to. So... security surely should be one of, I'm not talking about security of chain and token now, I'm talking about privacy, should surely be one of the most pivotal things for transacting.
And
do you think it's reasonable that if you pay somebody for a coffee, they know how much money you have in your whole bank account, any transaction you've ever done with anyone ever?
No, absolutely not.
It sucks.
Terrible. And so, people have lost the plot. If you send mail, no one's allowed to read it. It's illegal.
Yeah.
If you send email, everyone keeps a copy by law. They have to Data Retention Act you. What? It's the opposite. You lost your rights. You had a right in the analog world. You lost it in the digital world. It's disgusting. Same thing with financial privacy. Same thing with physical cash is a national security concern. In times of war, national disaster, acts of God, civil unrest, you need cash.
Sure.
And do you think it's fair that the government controls whether you can buy food and clothes or not because they can turn your card on or off or not? It's disgusting.
Absolutely not.
No, absolutely not. And this was the other thing that worried me immensely about some of the utterances that came out of Craig Wright. Not that we should be too hard on him. I mean, we might have lawsuits coming, but he actually didn't. He was like, you must be thrown into the wolves for government to tax you. You must be. He was not at all what I found libertarian of principle at all. And I
confronted him in person in Malta. You can see me approach him in person in Malta and describe what a scammer he is and how he is defrauding people. He is garbage. He's absolutely the worst. He's one of the worst things to happen to cryptocurrency. It's that simple. He's performing identity theft. He's not Satoshi, but he cosplays as though he is, and then people give him a lot of money.
For the people that are really strong on BSV and that he is. And I'm not holding up this argument with any conviction, but they'll come out and say, but why is the Kleinman family suing him for
because he tried to scam them too. He was like, hey, if you give me the private keys, I can make sure that they're like secure, man. So I know Dave died and all. Like, send me the private keys and I'll take care of them. Was his pitch, basically. Like, if you read the email, you're like, oh, that's an interesting email to be sending. So.
Okay, so through malicious intent, he came. In your worldview, and this we're just talking that he came to have access to that, not by origination purposes, but via
access to anything. So let's be very simple, right? What's Occam's razor? Occam's razor is given two explanations of something that both fit, the simpler one is more likely to be true. Okay, well, let's look at Bayesian logic. In the set of all human beings in the world, what percentage of those human beings are Satoshi? An infinitely small percent. Okay. Yeah. So on just a priori, before the fact, what is more likely? That someone that comes to you and says they're Satoshi is telling the truth or is lying? It's nearly infinitely more likely that they are not Satoshi because nearly no one is. And so what did Satoshi do? Satoshi invented a system to remove the need for trust using cryptographic signatures.
Yeah.
That's what he invented. So what do you think Satoshi would use to prove things? Proofs. And how would you prove you were Satoshi? Sign the Genesis block, sign a statement from it. $3 billion of Bitcoin holders signed statements to get their hex and mint it. Now it's about $4 billion of Bitcoin holders. It's like 306,000 BTC was used to claim X. They all use signatures to do that. Satoshi can sign signatures to prove things. So what happens is Craig Wright claims ownership for addresses that aren't his. We know who those addresses are. And the people that do have the keys to those addresses literally sign statements that says, Craig Wright is not Satoshi. So the people that do actually hold the keys that he claims to own and control sign statements cryptographically verifying that no, in fact, he is not Satoshi. It's so blatantly obvious.
Okay.
Let's get away from him anyway. It seems with that amount of evidence, I probably would err to.
Because what's the biggest problem with Bitcoin? Does it pollute the environment? It does. Is that good for anybody? Yeah, it's good for the power companies, and it's good for the third world companies that sell you the mining hardware and deliver it late. So they've already taken half of the profit away from it.
Yeah.
How do you get around? Oh, and by the way, what do you think miners do? Do they buy Bitcoin or sell it? They just sell it. They buy electricity and hardware. They sell Bitcoin. So every single day, about $5 or $10 million of sell pressure is introduced to the market to pollute the environment. And how does that benefit anybody? It doesn't. It sucks, but it's the security model. It's what proof of work, which is really proof of waste, requires. What if there was a better way? Yeah. What if you could piggyback onto an existing network that already was eating all that crappy environmental cost and just make their transactions worth more value, and then that pack your value on top of those things? Now you've got more efficient waste so that you're packing more value into the same waste basically. And you don't have, so for instance, like the thing I built, we don't pay miners inflation, so they don't have to sell it, so it doesn't have a negative externality, which what Bitcoin has every time. And by the way, Ethereum has, every proof of work coin has electricity bills nuking the price constantly. Yeah. In our system, we only pay stakers, and they have no electricity bills, so stakers are paid to hold the price up. They're the only people that get paid inflation. And in Bitcoin, miners get paid to shove the price down. And it's a protection racket. Who are they protecting you from? The only people SHA-256 hash rate protects you from is other SHA-256 miners. So if you're in a restaurant business and some guy comes in, nice Italian looking thug, and he says, hey, it'd be a real tragedy if your restaurant burnt down tonight, wouldn't it? You should pay us for protection. That's what the miners do now. So if you don't pay the miners, then they'll be the ones that attack you. And then what do they do with the money you give them? Well, what did Bitmain do with their money? They created a fake copy of Bitcoin that tried to replace the real Bitcoin. It's now at new all-time lows versus Bitcoin. How is this making the world a better place? It's all terrible. It's all bad. Their seasons just changed in China, so the Bitcoin hash rate dropped in half. I wonder where all the hash rate is. What's the worst place in the world to have all your hash rate? Behind the Great Firewall of China. They could just block the ports. It's I'm the guy speaking the truth about this, and I used to be the #1 lead Bitcoin maximalist. Yeah. And then I'm like, guys, the game's changed. The game is not the same anymore. The stuff that was on the roadmap then, they didn't give us. There's been absolutely no improvements. You can't do anything with it. It's not programmable money. It has no retail adoption. So the only thing we care about is price. And what is everyone hoping for? Oh, I hope I get my 50% move so I can get to all-time highs again. I can't wait. Oh, wow, 50% move in crypto. We get that every day if you buy the right thing. Like, come on. Like, if Hex is up 200x in a year, who gives a shit about a 50% move? Like, I don't care about a 50% move at all.
Yeah. Okay. So Bitcoin, quite a few challenges to be addressed there. Let's go to Ethereum because you mentioned some positives. Smart contracts, for example, platform, ERC20. We know we've got stable coins on there. There's that phrase that everybody loves, ecosystem, coming out. So how would you break it down? Positives and negatives. We've also got price of gas and various other things. So give me the good, bad, and ugly on ETH.
Well, I'll give you the bad first. Remember I told you Tether used to have all the transactions on Bitcoin, and they're a multi-billion-dollar project. More volume does traded in Tether than any other cryptocurrency. It's the highest traded cryptocurrency there is, even though it's not really a crypto. It's just their distributed central bank.
What's your take on that, by the way, while we quickly sidebar? Because of the stability, and sometimes people just need to move out the banking system?
Well, it's a regulatory arbitrage. So, do you want to take this money to your bank, or do you want to just change it into something else and hold it in the virtual world without taking it to your bank?
Yeah.
Okay, so it avoids an on-ramp into a system that people are losing confidence in, which also might be tax events and various other things.
There you go. So if you here, stablecoins are funny. Hey, the dollar sucks. Okay. Banks suck. All right. Giving people your keys or your money sucks. Okay. Not having FDIC insurance sucks. All right. Not getting paid any yield or interest sucks. Yep. Having fractional reserve sucks. Okay. Okay. I want that coin. That's what I want. I want every single possible layer of suck. Give me that. And then it's the highest volume in crypto. You're like
the real shit sandwich, as they say, with each layer of fertilizer.
How could you make it worse? I'm not really sure. So if you look at when Tether was trading, when Tether was using Bitcoin for their ledger, there was a middleware called Omni that handled the transactional, right? Omni only does $200 of volume a day. And the maximum volume it did when it was doing all of Tether's transactions was $600 a day. That's like a nice dinner for two people in a nice place. So what you learn is a multi-billion-dollar successful project, which Tether is, brought absolutely no price appreciation at all to the substrate that it operated on, the Omni protocol. Oops. Oh, you wouldn't think that, would you? You wouldn't think that. But reality tends to point out the flaws in people's thinking about how markets really work. So those transactions moved over to Ethereum. Did that help Ethereum? Not really. It just made everyone's gas fees higher. So in every economic system, layer is captured at different stratifications. So for instance, in the United States, Amazon's 50% of all internet commerce and the most profitable company in the United States, I think. Why? Because they control the endpoints. You go on their website, they charge you the maximum amount of money. Now, could they operate without shipping companies that ship the products? No, they couldn't. But are the shipping companies rich? No, they're not. They're just the substrate. They're the dumb pipe. So internet companies don't make much. Netflix does. The endpoints. The dumb pipes don't make the money. The endpoints do.
Yes.
So
Everything else gets commoditized. In fact, the more they have scale, the more they press down on prices and commoditize the returns for everybody else. Shipping companies probably earn the least per unit out of Amazon contracts, and they're buying just the volume.
Yep. So what you need is a pricing power moat to protect your competitive advantage, or else you just bleed margin over time until you're commodity and you have to change businesses. So, people say, how can Hex be more valuable than Ethereum? Well, how can Amazon be more valuable than UPS? And how can Netflix be more valuable than Comcast? Oh, because the value is at the endpoints. So what matters is the ticker symbol that people are buying. Right now Ethereum has upside. So I'm going to get into the upside, but I'm just telling you about the downside. So this concept that you think Ethereum is the best technology and it's going to solve a lot of problems, that doesn't mean the price is going to pump. The world is full of empty blockchains that do serve functions and are useful, but no one needs them.
Yeah. Appreciation and utility are two different concepts.
Sure. Yep.
Yeah.
Exactly.
I get that.
So now let's get, I love Ethereum. I love what they're doing. We have, if you want to do 2,000 transactions a second on Hex right now, you can do it at zksync.io. If you want to do anonymity with ZK rollups, you can do it at t.me/hexnado. We have those because someone else in the Ethereum ecosystem built them, and then we could interoperate with them. So someone had to build their own front end for the anonymity thing. But with ZK Sync, it was really just plug and play. Didn't have to do anything. They could just turn it on. So we've got anonymity and throughput in ETH now that Bitcoin may never have. It's just amazing. We've got stable coins in ETH, which are very important to people. It's the most traded thing in crypto. Bitcoin doesn't have that. We've got on-chain exchange. The most liquid order book in the world for Ethereum USD is not on a centralized exchange like OKX. OKX has the largest cold wallets in the world. They haven't done withdrawals in 2 weeks now. Oh, but I thought crypto was invented to get rid of middlemen and to put you in control of your finances and to give you your keys. People don't use it that way. 42% of all Bitcoin sits in 2,000 addresses, period. 50% of the mining is in China, period. It's crazy. These fantasies. People think that they're going to replace the banksters by making Bitcoin popular. The banks own more than you. You're making them richer than you. Like it's just like, I got to hit them with the truth bombs, man. because they don't know. They hear these, they think it's anonymous even. People think Bitcoin's anonymous. You're like, nope, it's opposite. You get everything wrong, right?
I've always asserted they will never let you fully have and own your own money, where you can fill in the dotted lines or the in commas, whatever they happens to be in your world belief system.
It's not their interest. Why would they give
not in their
give up
interest for
power?
that to happen. Yeah.
So
Back to it.
right now, the most liquid Ethereum USD market in the world is on Uniswap. A good front end for Uniswap is called ETHEX, ETHHEX. There's $1 billion of Ethereum sitting there in the order book, constant, sitting there that you can bid and ask into. It's amazing, amazing.
So how does this happen? That you actually have to, you do this, and that's where the liquidity is. And everyone's been expecting to go into Binance, the biggest exchange, highest volume exchange, and there's not anywhere near that volume on let's say Tether, because I think that's
they know they're going to get put out of business. The only thing they'll have left, they're going to lose all the trading stuff. They'll keep their regulatory arbitrage bank accounts to get deposit fiat into. That's the only thing they're going to keep.
So they'll become an on-ramp.
Lose everything else.
They're going to become an on-ramp site. Like they'll all become Coinbase, CoinFloor.
Right. Yeah. Because they're going to lose all them, because it's all regulatory arbitrage. Why did Binance do all that volume? Because they didn't AML KYC you up to 2 BTC. But randomly, they still fuck you. But a lot of people they didn't fuck, which is why they got sued for laundering 3,000 BTC that got hacked from another exchange. Because they just made like thousands of 2 BTC accounts and flew under the radar or had help there or whatever. So in OKX, you can't get your money. Oh, you're fucked. Quadriga CX, exit scam. BTCE, gone.
What is the exit scam? Is that, explain that, because I know everyone just says it, but everyone has different understandings. What is it?
Oh, you have deposits at some institution, an exchange, and then they leave and there's no money left. And basically then you don't get any money back.
Okay.
That's it.
So it's pure theft, basically.
Exactly. Embezzlement, technically. So the Quadriga CX guys just margin traded everybody else's money and he got wrecked and lost it all. He literally just traded away everybody's money and lost everybody's deposits. And
that sounds like our friend at Goldman Sachs. I'm thinking hard on the name. What was the MF Global? That was actually trading client money.
Yep. There you go. And then it's easy to get wrecked, especially when it's client money, right? So it's crypto is designed to get rid of middlemen and get rid of counterparty risk. Exchanges are middlemen. Exchanges are counterparty risk. Exchanges de-anonymize you. Exchanges make you take selfies and be a slave and beg for your money and charge you exorbitant fees and front run you and have their own internal team trade against you and make sure your orders don't get executed when there's due. And like, it's just all horrible. They give you margin to hang yourself. They introduce all these shit coins that end up going to zero and they make money on them all. It's just disgusting, corrupt garbage. You don't need to deal with that bullshit anymore. Decentralized finance has solved it, except for the fiat on-ramp shit. You still have to deal with that. If you go to ethex.com and you click, so like the default there is Hex Ethereum. If you click pool, you can be a liquidity provider. You can be a market maker, automatic, instant. You literally just take $10 of Ethereum, $10 of Hex, deposit them both. You just click a button, it deposits them both. And now if you're 1% of the liquidity pool, you get 1% of the fees. And the fees are 0.3%. That's it. Now that 0.3% also.
So basically this is to understand for many people that are not doing this, because I'm that typical dumb guy who does everything through exchanges. In essence, you can be part of a crowdsourced, white labeled liquidity pool environment for which there isn't a CZ or some owner, there isn't an Arthur Hayes, there isn't a whatever. It's going to have incredible depth because more and
Arthur
more
Hayes has got an arrest warrant out for him, so I don't think you're going to see him for a while.
Yeah.
That damn thing providing derivative services to Americans. Yeah.
I don't think what they're doing to him is exactly fair, but
I don't think it's fair, particularly because actually my experience with them is that I was in the States and they geolocated me and they wouldn't let me trade them, even when I, as a non-American, non-passported KYC guy. So they were doing their damnedest to stop it, but I'm sure somebody cheated them and then they probably even got an FBI agent to work their way in as a client.
We've seen it. We've seen those types of things. The entrapment. It happens. So Imagine I make somebody makes a restaurant and they just don't serve black people. That shit's illegal. That's discrimination.
Yeah.
Oh, okay. Well, what kind of discrimination do crypto companies get away with? Oh, you're American? Fuck you. No thanks. Oh, so because I'm American, I'm a piece of shit and I can't have good relationships with any crypto anything. That's disgusting to me.
In fairness, that started before the crypto realm with Swiss banking, with all the post 9/11 escalation laws and everything like that. So it is something that's existed in the fiat banking world first.
It should be illegal. You should not be able to deny a person service based on the happenstance of their birth. You shouldn't be able to decline service to black people if you're a restaurant, and you shouldn't be able to decline service to Americans. You shouldn't.
But at what point is the entrepreneurial imperative you get to decide where you wish to operate as well? I kind of have sympathy. If people are going to throw an inordinate amount, you've got a very aggressive government who's going to throw an inordinate amount of red tape that cannot see you serve these people in any form of profitability. I'm going to side with the entrepreneur and say he's entitled to say who he sells his hot dogs to. And if he wants to sell them in Smith Street, not Klein Street, because it's on the wrong side of the local real estate laws, that's his business.
So let me show you how stupid it is. You have a server in Seychelles, and you have an American who's lived in Thailand his entire life. He was born in Thailand, lives in Thailand, but he has the misfortune of having an American mother. So he has an American passport. So he has American citizenship. Now it's illegal to serve that Thai person from your Seychelles server because of some bullshit going on in some place thousands of miles away.
You get all those perversions, but the problem is he's surrendered himself. We're all incorporated at birth, and he's been surrendered in his incorporation to a particularly draconian set of legal rules.
And legislative needs to fix it. The laws need changed.
What we need feedback mechanism for the legislators that are overly draconian. What they need is to see an absolute run on US citizens, all de-citizenizing and becoming citizens of Panama, whatever beliefs.
If you want competition to breed excellence, then people have to be able to choose between more than one thing. Yeah. If you force a monopoly, you're not going to get excellence. Yeah. So back to Bitcoin and Ethereum.
Back to Ethereum. So,
if you like Ethereum being a wonderful network, it is. If you like that's where all the new shit coins and Ponzi coins are going, and people are just, I want to buy the new shit coin, that's where it's happening. Now what happens? They add liquidity on the Ethereum side and the shitcoin side, which gives you extra Ethereum lockup virtually. So there's $1 billion of Ethereum locked up in those liquidity pools that wasn't there previously, and it has product market fit because you don't need AML, KYC. This trustless, selfless, you can't get hacked. You've got this tiny bit of smart contract risk, which has been well audited and well researched and is infinitely better than any infrastructure at any centralized exchange. So you're replacing the terrible legacy systems with a peer-to-peer open source public good that's the most liquid order book in the world. It's amazing. And this is brand new. This is only months. It's only been in this state of amazingness for some months. A year ago, it wasn't amazing. Now it is amazing. You have to learn it. You need to learn how automatic market maker works. I mean, I could tell you how it works, but do you want me to tell you how the formula is, the formula it used to set the price?
Go on.
Providing we don't get too mathematical. It's late in the day.
It's actually. You praised me for being able to explain stuff in a way people can understand. I'm gonna keep hitting that target.
Good.
So right now, let's take a look at Hex liquidity. Hex made a new all-time high today. It's up, I guess, 177x or something. It's funny that I speak in X's. Bitcoin's up 1.3 million X, Hex is up 200x. If you look at the liquidity in the automated market maker, there's two sides. There's Ethereum and there's Hex. Right now, there's, let's call it 10,000 Ethereum there. It's about $4 million, right? And then you've got 4 million of Hex there. 8 million total liquidity. What happens if someone comes along and they double the amount of Ethereum that's there? They put in another 5 million or 4 million of Ethereum, and then they take out, so they doubled the Ethereum, and now they're going to take out half the Hex. Yeah. It makes the ratio change by 4x because you doubled this side and you took this half side out, and it 4x's the price. So the price in an automated market maker system is literally just the ratio of this thing to that thing, and it could be any two things.
Well, it's supply and demand, and
yeah.
And you could add new things. You could go make your own coin and add it. And now you've got a working exchange of this to this. So think about this. And this isn't a single order. Once that happens, people continue. They can either continue with the movement or they'll sell it back down. Usually you're going to get a sell down, but sometimes you just get these green candles of insaneness. Yeah. So right now you got 5 million in or 4 million in ETH, 4 million in Hex. Let's say someone buys 8 million, market buys. Now you've tripled the pool. Now the price moves 9x because you tripled the pool and you took 2/3 of the stuff, 9x ratio. And so they move as a square. So if you 5x the ETH that's there, you get a 25x price move. If you 10x the ETH that's there, you get a 100x price move in that single candle. You can't do that in any other order book. You go on a centralized exchange and you say, oh, well, how much is the price going to move if I eat this far into the order book? You can look, it'll calculate it for you, but it won't tell you about the iceberg orders. It won't tell you what bots are going to kick in and jump in. So there's a lot of uncertainty when you're looking at a static CLOB central limit order book, which is what you're used to in centralized exchange. An automated market maker, there's no spoofing. The liquidity is already there. You know exactly how much slippage you're going to get. And you choose if that slippage isn't what it was advertised as, just fail the transaction. You choose what your limit of extra additional slippage is. It's amazing, right? Yeah. So
I think this was the video you were talking about, speculative stickiness. Is this particular video would go into greater depth on it, speculative stickiness?
Yeah, well, this will take you to the level 2. Like if you know about NASDAQ on level 2, yeah, it gives you more data about the trader. Like who is that trader? Yeah. What are they doing? What are they likely to be trying to do? Because this is all on chain, you can see when somebody bought, when they sold, how much they made, if they used margin to do it. You can get something called a flash loan and borrow $50 million for free. $50 million for free, you can borrow it, perform some arbitrage, some transactions, buy this, sell this, buy that, sell this, and then at the end, pay back the loan with the interest. And some guy just did that and made 25 million yesterday. He figured out a way to like push the order books around and suck $25 million out of some people that were providing liquidity.
Is that a good thing though for market participants?
That's
it was
possible.
A good thing for the guy that figured out how to get 25 million. It wasn't a good thing for the guys that lost the 25 million.
No.
So I just did a live stream yesterday.
You see, that's just going to push up the amount of people that are talking about manipulation when you get such extremities of scale and someone who takes a chance, who thinks they've got a short-term edge. And that's going to lead to, oh, my stop was run, I'm being eyeballed and tipped out. And you'll lose the confidence of the masses.
Look, if you put your money in unaudited financial software with anonymous founders, you deserve to lose all your money.
So what's the point of doing that then?
This is a move slow and be real safe and secure because everyone gets hacked all the time. So you better do it right. You better do it right. So there are people that get hacked constantly. And I mean, OKX, how many billions are trapped right now because the founder's under arrest? Right? But why? Because people gave them their coins. I don't want to show my thing too much, but think about all that money that gets lost. Why do people put their money in exchanges? Because they're trying to make yield. Well, what if you made a smart contract where it paid you the yield and you kept your own keys? There's no counterparty risk. You can't get exit scammed. You're minting your own rewards just like a Bitcoin miner. Bitcoin miners invented and minted every single coin that's ever existed in Bitcoin. Every Bitcoin any of you hold in chat right now went through the hands of a miner. He made it and invented it for you. He didn't ask for permission from anyone to do it. He didn't receive it from anyone else. He invented and minted that coin himself by the rules of the network. And now you have them. Well, you can do the same thing, except instead of rewarding people to pollute, you reward them to hold the price up, just like they do in legacy and CDs. And now, like, you don't have people getting exit scammed. You don't have people using insecure software. You don't have people using centralized limit order books with iceberg orders and hidden tomfoolery and spoofing, right? Where you show an order and then you pull it right before someone goes to fill it, right? Oh, there's some liquidity. I'll tap that, get a good execution. And boop, and oh, it's not there. And you didn't use a limit. So now you're filled way up here because you used market. Oops. Now you know not to use markets ever. Never use a market order ever. Use limit order always, or you'll get filled somewhere you didn't think was possible. Particularly when there's lag on the exchange, like the trade engine's, 30 seconds behind what you think is going on, or it's 30 seconds ahead of your screen. Depends. It could go both ways. So Hex solves centralization, solves pollution, solves exit scams, solves it solves so many damn things. It's just crazy that no one else has done this. How could you want to replace the banks and not build their second most popular product? Isn't that like, don't you have to build that? So you've got to build that because people still want to use it, right? It's absurd.
What would you say though, if critiques and people are saying, oh, we're not sure about Hex, because you're getting everybody to stake, you're actually killing the fact that there's any true liquidity in sellers, and it's easier to drive a market up in a captured, they'll say, token on the basis that people are being paid to hodl it.
Sure.
And there's the market. It's almost as you said, that money's captured in bank reserves. It's not actually, the velocity is being purposely diminished on account of there's no circulation and use. So we've actually released Hex, but we've tied it all up. Therefore, on very thin volume, it can be bid to the moon. And you could be distributing as the founder at the high end all the way up and quietly stashing it into something that you think is more stable. How do you answer that?
So people think that the dips in crypto are some type of like bad side effect, negative thing. That's not actually how it works. In a closed system that doesn't have outside inputs, you're literally just redistributing money. Dips allow noobs to buy tops and sell bottoms. And who gets the noobs' money? The people with longer time horizons that can sit through the volatility. Yeah. So if you want to make people in your ecosystem rich and you have a closed ecosystem, you must have losers. How are you generating those losers? Through volatility. Yeah. So if you have infinite liquidity, for instance, we were talking about the Ethereum Hex pair. Let's say you had infinite Ethereum and infinite Hex. Now the price literally can never, ever, ever move. It can never go up. It can never go down. Yeah. And so there's an art to having just enough liquidity for whales to be getting reasonable execution to want to play along and not have so much sell side pressure that you can't have a super price movement up. So in Hex, we have a ton of volatility. We have dropped 70% 3 times, but it just doesn't matter because if some whale comes in, he buys in and this, I've seen this with my own eyes. It just shocked me the first time it happened. A guy market bought $2 million, doubled the Hex price, and then it just kept going. And then you looked at what he did with his coins. You're like, all right, are you going to dump those coins? Are you going to hold on to them? He stakes his coins for 10 years and left. That's it. Like he ended up buying more later and doing other stuff. He even put money into games built on Hex, which I think is retarded. Like I would never put money into the games that people are building on Hex, but he did. I'm like, I thought this guy was super smart. That's why I chose this coin. But no, I guess he's not super smart because he did some other shit that just doesn't make sense to me. So you can see how long they're locking for. You can see what other coins they own. You can see when they got in. You can see when they got out. That has never been available to you as a trader before. I knew that he would pump the price more or have the opportunity to because I saw this huge multi-million-dollar bag of Ethereum he had. He had like $20 million of ETH just sitting in his bag. I was like, well, it looks like he's just buying this. Like, yeah, man, you got friends. How do I find more dudes like you? Right? Yeah. So what was?
So how did we cope with the whale in terms of liquidity and price move? Because we talked.
So now this guy, when he put his Ethereum into the Uniswap pair, he put his Ethereum in, and the Hex came out. Well, that Ethereum stays there for people to sell into, unless liquidity providers pull it out. So anytime someone enters the market, and this is, by the way, this is totally different from a central limit order book. You sell your Bitcoin on an exchange. You place a market order or a limit order. You find an order match with somebody else. So he had dollars, you had Bitcoin. You switch them. Now he's got Bitcoin. Now you've got dollars. You both leave. Is there any record that you were ever there? No, just a blip on the volume bar in a history of the trade. And that's it. That's all the price chart sees. But in these automated market systems, when you come along and you put in your Ethereum and you take out Hex, your Ethereum stays there. It stays there. And it's totally different price behavior and generates a totally different looking chart than a normal central limit order book will. So I see patterns in Hex price movement that I am not familiar with in normal charts. It just plays differently because the automated market maker behaves differently. Now, do I think there's going to be dips? Hell yes, I think there's going to be dips. All crypto drops 85 to 95%. always, except stable coins. And they could go to zero like that. So you have tailwind risk. So anybody that tells you that the volatility is not there, one, you can't make money without it. And two, it just doesn't make any sense. There's no traded speculative instrument in the world that doesn't have dips. The S&P 500 dropped 22%.
Yeah.
Is that a big market? The biggest market in the universe? Well, it dipped 22%. Isn't that a pretty big dip? Bitcoin just dropped 65% in 2 weeks about when COVID hit. Ethereum dropped, I think, 75% in that same 2 weeks. Hex went up during that period, which is pretty cool.
Yeah.
So sure, look, if you're worried about getting out, I suggest you scale out instead of hitting the hammering the order book. And I could show you systems that will let you set limit orders in Uniswap. It's called Uniswap X and EX at the end, and then they just traded to some new thing like Pine.finance or something. So you have to learn this stuff. You have to learn it because they're the most liquid markets in the world. The most liquid market in the world for ETHUSD is this system. You have to learn it.
Yeah, I think that's a project for me that I'm going to have to spend a couple of weekends looking into. Let's carry on with our run through the coins. What else about Ethereum? Are we done with Ethereum with the positive and negatives?
I'm bullish Ethereum. Ethereum from the COVID dip is up over Bitcoin about 2.5x from the dip. So it's showing massive strength. It's superior technologically. It dipped harder. It did, from the 2018 high. It dipped 95%. Bitcoin only dipped 85% because it's a less liquid coin. The market cap, is smaller, 8 times, 7 times less than Bitcoin's, I think. Yeah. So that's opportunity.
Yeah, that was that was the chart for it, by the way. Just to, I suppose, give us a segue. This was our call for us to be biased long Ethereum. And as I say, we're just feeling it's a bit giddy now and just giving up some ground. I'll just take some of our annotations off, but that was that was a key breakout on a volatility squeeze. And this was a 478 target we had on the USD chart, and that literally was the high. It was quite interesting. But then this is a little bit head and shoulder-esque, and that's why we're coming off. But I think this is part and parcel of the staircasing.
So head and shoulders and legacy usually dip, but head and shoulders and crypto, a lot of times you can go right up, just like ascending triangles.
Definitely. We don't trade typically reversals, particularly in bull markets. But this is across crypto reversal, so it's not. It's delta neutral to crypto. So this is a relative strength assessment, and that was the structure that we saw there. But I think I'm expecting good things, but I think it just might.
Why don't you pull up the hex chart for laughs?
Yes, I did. I had it up when you were talking about hex. I'll pull it back up again.
You go to uniswap.vision.
What am I searching for? Because I just found BTC.
So, okay, we'll stay in trading view. Type Uniswap. Don't type hex, just type Uniswap. And then colon.
Full colon, eh? Yeah.
Yep. And then hex.
Wrapped in Ethereum. Yeah.
Well, that's the pair. So it's Ethereum versus hex. Wrapped Ethereum is really just Ethereum. They're interchangeable with no slippage. Oh, okay. This is the V2. We don't want to use that one for history. All right. So and you type in your browser bar. They only got V2 on this. You need to go to V1. It's older. So you got to go to your browser and type uniswap.vision. I forgot these guys didn't have V1.
That fella?
You're going to like this chart, dude. Now let's make sure it's, I got to wait for it to load. So this is on the V2 pair. All right, go top left there. It's in the top left to just type X. And then go to the USD V1 pair, calculated V1.
Now
we're going to have the history.
V1, yeah.
Yeah. So this is the oldest, longest running chart. So all the volume moved over. See how on the top it says there's only 11 Ethereum liquidity there? All the liquidity moved over to V2.
Yeah.
So if you go to your daily. Yeah. So this is hilarious. You go on log auto. You got to click log bottom right.
Oh, sorry. I thought you meant log scale.
Yeah, you're on log now.
Okay.
Well,
Yeah.
go back to log. Yeah. So you could actually, if you're just drawing trend lines, you could draw some trend lines here and they play. Do a measured move from the bottom to the top.
Which tool are we using for that? That's not
it's the one down. It's just above the left arrow. Do you see the left arrow? Yeah, click that.
You mean
and it'll be a rectangle. It's you're measuring your percent move up. Middle, date and price range.
Got you.
One down, two down, date and price range. Yeah. Just grab that bottom of that wick and measure it up to the top. Yeah. Tell me you've ever seen a chart like that in your life. Ever.
Yeah.
Now, mind you, this volume, it moved over to V2. So you really have to look at both if you're looking at volume. But if you're just looking at price, I mean, this is up 18,000%, something like that. Because I designed it too. Like, people think you can't design.
Yeah, but the point, people will say that's too much of it's manipulative by design. Then they'll say it's almost a fake scarcity.
Because
but Bitcoin's up 1.3 million X, and it has a pumpamental called the inflation rate drops it by half every 4 years. We just did more intelligent game theory
version of it. Yeah.
No, look, I can understand that. I'm trying to play devil's advocate while we work our way.
Hex is called a scam all day, every day by everybody. So I'm used to every hard question you could dream.
Yeah.
Because people don't believe it's possible. They just don't think that you can get those returns. But you're like, look, now go look at the historic Bitcoin chart. It looks the same. Go look at the historic Ethereum chart. It looks the same. New amazing coins with product market fit do this kind of crazy stuff. It just happens.
Yeah.
Yeah, but I think that this is where people come at it. Bitcoin was the original that also had the intent, even if it's not fulfilled that intent, of being a money alternative system for utility and transaction. That's not really happening, as you've clearly pointed out, and I would agree largely that's correct. So it had a purpose, but it's now fallen. It's kind of like it's a kind of Facebook's criticism of Twitter. You know, clowns drove into a gold mine shaft in a golf cart by accident, in that it stumbled into an incredible store of value, mainly because of what's going on macro fundamentally in the external world in terms of economics, etc. Now, there was an intent there. If you go straight to designing something for intent, it opens everybody up to the notion that at some point you'll be harvesting, having maybe pre-mined for yourself. I don't have the details, and this is not an accusation.
Well, I could tell you the founders like rewards and all that stuff.
Yeah,
that's very obvious. Well, I mean, it will be now. There's an origin address that gets about half the supply. Yeah. Now you can do chain analysis and see what that thing has done. In the very beginning, it sent its coins to addresses that would stake for 10 years. Then it was lowering the payouts for everybody else in the system, making the rewards too low. So nobody knows, because nobody knows who it is, but we can make guesses. Maybe that entity wants to see the project do well and knows that it's very useful to have a high ROI to be able to onboard people and a higher market cap. So when people in Hex stake, it burns the coins, it lowers the market cap. So if you want a high market cap and you want high ROI, then you need low stake participation. So to the best of anyone's knowledge, including mine, no origin address coin has ever market sold on market ever. And if you think about it, since millions and millions and millions of dollars of Ethereum has been given to the contract and transformed into Hex, whoever that entity might be probably has millions and millions and millions of dollars of Ethereum. They need money, they can sell that. They don't need to hurt the Hex price. Do you know what I mean? Yeah. So it's very similar to the EOS launch. EOS did a very similar thing. They took Ethereum, turned it into EOS, and then it did a 40x in the bear market. This exact same launch model. They had like a 365-day launch where you could turn Ethereum into EOS, and then Hex basically did the exact same thing, very similar. And so they have very similar launch profiles. If you bought day one, you got wrecked, and then around day 100 to 130, it found a bottom. And then you had exponential performance towards the end. And Hex is very similar to the EOS chart.
Yeah.
But EOS hasn't really done that well since. It's fallen off a fair bit. Anyway, now what I want to avoid doing, just being a soft interview for you to overly make the case for Hex. I'm thinking maybe the people will say you're a patient person about your harvesting strategy, and you're holding on because you're catching a bigger bear by the time the whole thing gets pulled down. And I suppose the proof's in the pudding on your project, and we'll keep it monitored. Keep tearing Ethereum apart, or let's move down the coin market cap to the next.
So I'm bullish Ethereum. I'm bullish Bitcoin. Yeah. Once again, you're going to get a price multiple. It used to be that Ethereum would move like 1.5x whatever Bitcoin did. Now it's up 2.5x from the bottom, maybe even more now. And it's where all the developers are, and it's where all the new coins are, and it's where the new liquidity is. Everything's there, and nothing's on Bitcoin. I believe Ethereum is going to continue to murder Bitcoin's performance. Period.
I agree with that. And that's a very relevant fundamental insight. So we will capture those things technically, but it's really useful to have a fundamental bias. And your fundamental bias is confirming mine to a degree. That in the event of a clear bull market where the Bitcoin dominance has had its initial play out, you will want to rotate more into Ethereum and possibly others for a bigger multiple.
I'll tell you something I learned about price charts, that as a person that's been on television as a technical analyst and made really great price calls, I was amazed that I finally figured out why crypto all goes up and down together. I always thought to myself, how stupid is it that no matter how unrelated two coins are, they all go up and down together? It's almost like there's an index fund that's just weighting its index by market cap, and it's just buying all the garbage along with the good stuff, and they don't really care what the stuff is, and that's what's keeping all the prices together. I actually figured out what it is, and it's not that. The reason that all crypto goes up and down together is because all of their price charts are actually linked by the liquidity in their order books. And here's how I discovered this. I was looking at the Hex chart, and I was looking at the shape, and then I looked at the ETH chart, and they were identical shapes. And I was like, why? Why are they identical? I mean, ETH is ETH and Hex is Hex. There's no reason for these two to be identical chart shapes. And then it was like, all right, well, how does this shape occur? Well, the most liquid market that sets the price, the USD price, is the Hex ETH market. And so if you can, as long as two things are interchangeable with each other, and then one of those things is setting the USD value, their charts will literally always be equivalent. And the only time you'll see the two charts move apart from each other is when someone executes their force on that pair, on that order book, and changes where they are tied together. And then they'll go back to moving the same again. So if someone adds ETH and takes out Hex, the Hex price goes up a bit, and then it's equal to the ETH USD price. And then if someone sells, it moves down and stays equal. And so it was amazing to me that, like, if Ethereum 10x in price right now, Hex also 10x in price right now, because you could go sell your Hex for that ETH that's there. So it's very important to understand that in these new ecosystems of automated market maker coins with dominant pairs on the Ethereum pair, that all of their charts will equal the Ethereum price chart if there's no trades, right? So if there's just flat movement, it's just very interesting. You're like, oh, they're moving in step because one of them is setting the price for the other. The dominant thing, ETH, is what you're trading for USD. That's setting the price.
Well, it's the gateway. It's the gateway that completes the triangulation to dollar. And are we having a risk on and a risk off? Because at the end of the day, as much as crypto likes to think it's its own bubble, everybody who's engaged in it has a hand in the real world as well, and is shitting the bricks because their stocks are dumping, their 401k is down, and they're risking off. And that's what...
It's a risk on asset. It's not a hedge, it's a risk on asset. And it just maybe diverged, maybe this last week or two, maybe. But we'll see if that sticks, you know?
But we could have longer periods of divergence because we're still, in terms of adoption and in terms of newness, and also market cap, small allocations of more fiat could create disproportionate more moves. But overall, in the longer run,
the thing I just described, where the two price charts are equal, except for people occasionally shoving them around, and I described Hex to ETH, it's also crypto to legacy, same relationship. Yeah. You could chart them, you go in TradingView and just click compare, and you could literally chart the S&P 500 versus Ethereum versus Bitcoin, and they mostly are correlated and mostly move in lockstep with occasional divergences. So we're all in this boat together. Number go up usually makes all numbers go up.
I keep talking about this chart. The guys that follow my channel will probably get irritated that I'm bringing it up again, but I think it's a really interesting one. I'm going with Bitstamp because of its tenor. But if we just divide by the most powerful other real-world asset, which has been the NASDAQ, I keep highlighting such a strong justification for the bull bias, because we're going to print, they're going to stimulus in the States. Where are you located, if you're free to say? Are you in America at the moment?
International man of mystery.
International man of mystery. Are you not in America then, I'm assuming?
No.
Okay. Well, if we just say the NASDAQ has been the most flagrant beneficiary probably of the asset price inflation of all the extra fiat, because it's a much smaller market, then keeping all these proliferation of bonds at such as ridiculous yields takes the most of the money that they're creating, in my view. The debt is the bigger market, but the NASDAQ gets some spillover. And in that relationship between risk, oligarchical tech companies to the even larger debt markets, it's almost like the crypto as the smaller guy to the NASDAQ market, where the NASDAQ now becomes the debt market and the crypto. And we were highlighting that this is very much, it's one of my favorite charts, that this is breakout against the two. And what you're looking at is the Bitcoin divided by the NASDAQ. So we're actually getting a relative appreciation of strength.
You know, you can do math in the ticker symbol area and do really interesting exotic things. Just actually do multiplication and division in the ticker symbol area of TradingView. It's fun. You can divide one ticker by another ticker.
That's basically what I've done here. This is Bitcoin divided by the NASDAQ. So you're actually looking at that right now.
Oh, I don't have it on my screen, but
oh, sorry, I'm not showing screen. I apologize. Yeah, let me just get that back up. You see it and you think everybody's seeing it. So that's right. So I'm in the top left, and we're doing that's the maths that I put in. So I put in stamp divided by NASDAQ, and it is one of my favorite charts. And this was a key turn back zone over here, or on a number of occasions, that has now been taken out. Now you can have a return move to these levels. Technically, as a technical analyst, you'll appreciate that. But
overall,
it's a wick-off retest, right? Or what's the wick-off for that? I think it's a retest, but
typical. I just call it a retest. It's typical when you take a key level of significance. And the interesting thing about that is it's very close to 1. It's a unitary value of Bitcoin's value to NASDAQ value. So we talk about key levels of significance, but the target that's generated is 3.5. So that's an outperformance multiple. You were talking about multiples in the beginning of that. So that's a crypto outperformance multiple. So whenever the stimulus comes, we're probably going to get an outperformance multiple on crypto or Bitcoin, even to the stinky stocks that are very well stretched at this point. So yeah, it's just one of my favorite charts and sums that I like to do. Yeah. Sorry. Okay. So Ethereum. Let's finish. Final summarize.
It's where the liquidity is. It's where the stable coins are. It's where the high throughput is. It's where all the developers are. It's where all the new coins are. It's absolutely fabulous.
And in terms of the issues that have occurred on Bitcoin, where you've suggested that people look at this and do certain things and you get met with this wall of ambivalence, Ethereum is more responsive to tests, changes. Yeah. So mentality-wise, have you spoken personally with Vitalik or any of these big guys?
I respect him greatly. I think I support longevity research. He supports longevity research. He's donated millions of dollars to the SENS Foundation, which helps try and do regenerative medicine and keep people younger so they don't get diseased and die off so quick. He writes open source software. He's a great guy. I can sell Ethereum better than he can because I've heard him try and do it, and it wasn't a good sales pitch.
Yeah, he's a great technical guy. He's probably not a great salesperson, but if the intent in the heart is good. I had one issue that I didn't like that he got involved with a professor, and this is probably very hard for a young man. We've got to remember he's still a young man. He's technically super smart, but he's a young man. It's easy maybe for hijacked interests to associate. But there was this, I've got this is slightly conspiratorial, so you'll have to forgive this tangent. But there was a professor from one of these academic institutions, probably Chicago, Yale, Harvard, whatever, and they were talking about property all being moved onto the blockchain and how everyone would have to declare the value of their property and there would be charged rates on it. And at any point that you were under or lowballing that property valuation, anybody could trigger an instant purchase of that said property, and you would essentially be outed. When you tie this in with the World Economics Forum about everybody owning nothing and on as happy as Larry on their happy pills and everything else, I felt that the wrong kind of controller influencers were getting involved, and this was involving, and Vitalik was sort of going along with this, and he probably doesn't have the way I view master controllers universe, and maybe I'm a nut, I don't know, but I didn't like that association at all, and I felt I wish he stood down.
For punk and you know, the soy boy, some of the Ethereum soy boy kumbaya friendly stuff, it doesn't play in the real world. The libertarian force, you've got to renew your freedom with the blood of patriots sometimes, is how it works. So that's the real world. I have a very unique and accurate take on real estate on the blockchain. It is a terribly stupid idea that should never happen for the following reason. Blockchains are the world's most expensive and slowest databases. They're garbage. They're terrible. Working with them is the worst thing ever. If you write data to a blockchain, it could get forked off and lost. So you have to run your own computer that has your own copy of all the data that you ever wrote. And then you have to query the blockchain and be like, hey, is my data still there? Is my data still there? Is my data still there? When you try and write to the blockchain, sometimes what you write gets orphaned away. Sometimes what you write doesn't get in because the blocks were full.
Explain orphaned away. Explain orphaned away, because I don't and many others won't.
When you have 13-second blocks, two people will find a block that meets the requirements for earning the block reward, and they have different transactions chosen inside of them because the miners decide what transactions get in and what ones don't. And so now you've got one guy that's going to get the block reward and become the authoritative chain future forward. And then you got one guy's attempt that was just, it was in, but then the network found consensus on it, the other guy's fork, and then it got out. So it'll be in for a little bit and then it'll be out, and it's called an uncle. Right. So because of the high speed rate at which the blocks, you still get this in Bitcoin, but you just get it less often because it's slower. 10-minute block, you're going to get a lot less orphans than you are with 13-second blocks. So it emergently finds consensus. But then, like, a guy does $1 billion Bitcoin transaction in one single move a couple days ago, and guess what? Now it's profitable for a miner to roll back the chain 40 days to make it so it didn't happen, right? Or someone could, the person that sent that $1 billion transaction and reaped reward from it, let's say they bought a villa and they bought an island. Yeah. So they bought an island, they got a bad deal on it, they paid $1 billion for an island. Now it's now in their best interest to pay some miners to change it so that their money never actually got spent, because now they got their island, and they could roll back the chain 40 days and give up 40 days of rewards to go make the money that guy would pay them in order to have his payment back. And so if you send a single $1 billion transaction of Bitcoin, you're no longer using the security protocol that Bitcoin is developed around. You're just hoping that people don't roll it back just for fun. Yeah. So you should never do $1 billion transaction of Bitcoin. You should just split your transaction up into smaller amounts, and then the reward and incentive, the work that the miners would have to do would be so much more larger that it's not worth it for them to do it.
What's that value because I mean, that's a flaw as well, because somebody who doesn't know what they're doing, some rich trusty kid could do something close to a technical level that it is merit-worthy. Surely that's
Binance got hacked for $50 million, and people were telling them, for $50 million, you can roll back that hack and just make it so the hack didn't happen. You just need to pay the miners enough. So you could just give your private keys to the miners, and then the miners will roll back the chain and steal the hacker's money back away from him. Let me tell you, if I ever get hacked, I'm giving away my private keys, and the network can go fuck itself. I ain't never been hacked. I don't think I'm ever going to be hacked. But if I ever am hacked, I'm going to give all the money to the miners instead of the hacker. And the miners can roll back the chain and take out that hack transaction and steal all the money for themselves, and then the miners will get it instead of the hack.
This worries me, though, because it takes you into the wrong incentive scheme. Because part of me, behind the people that created the antivirus software, weren't they the guys that created the virus in the first place? In many instances, not universally so. Were they the exact party, but are they people that are incentivized to have those issues so that they get paid to solve them? It's almost like the guys, you pay guys to dig holes in the road, and then you run the construction company that fills in holes in the road. I just think
so if they roll back the chain, they'll still keep all the other transactions the way they were. Yeah. They don't need to they don't need to screw everybody.
This is time machine story, though, isn't it? It is a bit of a time machine story, because, hey, if you're rolling back the chain for 1 billion and there's a bunch of other transactions that were fairly chunky along the way, why not, if you're doing all that effort, it's a bit of a
don't have $1 billion transactions is the solution. Yeah. And then the math becomes infeasible. It's no longer profitable to think about. So
this started. Sorry. So this started because we were talking about property on the blockchain, and you're pointing out that actually
blockchains suck. If the ocean swallows your property and it's not there anymore, someone has to tell the blockchain. Someone needs to do analog to digital conversion. Okay, this house used to be here. Look, it's not there anymore. So now we need to get rid of it in the digital representation of the analog world. Okay, who do we trust? Who do we trust to measure the real world, and then tell the blockchain what to tell everybody else? And that's your single point of failure, whoever that person is that you trust. And if you're going to have a single point of failure with someone that you're going to trust to update the blockchain when the real world changes, let him just run the thing on an Oracle database or SQL database and not have all the suck of the blockchain. You don't need the sucky blockchain. Nobody else uses a blockchain. Aerospace companies don't use a blockchain. Amazon doesn't use a blockchain. They'll sell it to you. You can buy it from them, but they don't use it. They don't need it. And they do 50% of all the commerce in the United States. The world works wonderfully without blockchains.
Well, when you talk about it like that, I want to summarize this for a little bit. It makes it feel like blockchain is just a big transparent goldfish bowl for us all to put our server private information into a realm where other people can examine it. In that essence, particularly for big transactions like property, it sounds like an awful idea.
Now, but it doesn't have to be that way. So we have zero knowledge proofs now. A few years ago, zero knowledge proofs were cutting edge. Now we know how to work with them. There's open source plug and play things that you can use to prove things without people knowing how you proved them. So you can prove that you hold keys to a thing. You could prove that you have $1 million of keys, but not say what keys they are. You can do zero knowledge proofs now. So zero knowledge proofs allow you to transmit value. So right now, let's say you wanted to make your hex anonymous. You go to t.me/hexnado, you click the website, you deposit your hex, other people deposit their hex, now there's a big pool of hex. Then you decide to withdraw. Nobody knows that it was you that withdrawed. They just know somebody withdrawed. They don't know it's you. And you can do that with Ethereum at tornado.cash. So, and the fees are expensive because gas is expensive now, but you could also do similar types of obfuscation using ring signatures and Monero. So Monero provides something like that. So you have an anonymity set, an anonymity pool. You saw a bunch of people went in, you saw one person came out, but you don't know which one it was. You see what I mean? And that will work for all types of things. But so back to the digitization of things and putting them on the blockchain. This is the Oracle problem. The Oracle problem is, I am a blockchain. I want to do computation. I want to manage house deeds. Someone please tell me what's going on out there. Can't see anything. Can't see outside. Hey, human, tell me what's going on out there. And then that guy lies. Oh, I'm going to fix charities in Africa. We're going to use blockchain. We're going to have sandwiches delivered by the blockchain. And the guy's like, oh, so the blockchain says I'm supposed to deliver this sandwich to Sally. Well, actually, I'll say that I did, and then I'll deliver the sandwich to Jim. Now what? What are you going to do? So anytime the blockchain meets the real world, the non-digital world, it is going to fail because there are humans in the middle. And if it's trust that human, then you can just trust him to run the database in a quicker, more efficient system, like any other database. And you can use logs, and the logs will prove history. And you can publish logs to the New York Times microfiche. And you can have, the world is not having any problems losing data. The world is not having any problems handling inventory. That's just made up buzzword crap that people are using to sell tokens. The only place blockchains belong is when you need censorship resistance. No one's trying to censor your inventory. No one's trying to censor that you own a house. People are trying to censor your financial transactions. They are doing that. So we need censorship resistance for currencies. We do not need and should not have blockchains where you're touching an oracle, a human that can just lie to the system. It's stupid. Yeah. By the way, New York Stock Exchange published bad prices. Even if you ran the most honest oracle in the world and took the New York Stock Exchange data out of their server and put it right in the blockchain, guess what? It's wrong. You need to go change it because they published bad data. So now you got to trust somebody to fix it.
Yeah. Okay. So property and
blockchain, even though it's been around for 10 years. This is not a new technology. This is an old technology. It only has adoption for speculation and regulatory arbitrage. It does not have adoption anywhere else because it doesn't work well anywhere else.
And as a result, bad idea for property. And you would encourage, if Vitalik were the third person in the room, you'd say, don't do it.
Exactly. I mean, Vitalik is a smarter person than me in a lot of things, but I've got more area under the curve. So if we're talking about designing consensus networks, will be able to design a better consensus network. If we're talking about better game theory, salesmanship, logo, brand, sound bites, thought leadership, I do it better.
So moving on to if we go back to market cap list, let me just go back to, let's go to nomics. We're not going to talk too much about Tether. We've spoken about Tether coin. Ripple is the one that
they minted a billion extra Tether and then were just like, oops, and then just destroyed them.
Now, let's get to this. This is another great thing. So I was speaking at the Dollar Vigilante, and I was talking about short oil and go long gold. That was in February this year. It was a theme for the back end of last year that we'd started. So I wasn't overly in the crypto space, but I was attending. They also had the crypto thing, and I had one guy who was chatting, and he was convinced, and he made lots of cases that, I think it's Brock Pierce, is it, of Bitfinex, or his part involved in the Tether, that every move in Bitcoin or the crypto markets generally is generated by a first and initial spike in the stable coins. And I was just wondering aloud, well, isn't it just money coming in that then sitting on the sidelines that then goes in? It doesn't have to be a fraud. It could be, but it doesn't have to be a fraud. You know, they were saying, well, it's,
if you try and, I mean, look, everybody knows when Tether mints, everybody. And as soon as everybody knows a thing, there's no longer alpha trading it. So it's like, you're not, I don't.
But what's leading to that minting? Is it legitimate purpose that leads to it, or is it just another gaming of fractional reserve being levered up? I mean, is that, what's your take?
What's your take?
They try and keep a 1-to-1 ratio, but then the banks rob them. And then what are they supposed to do? Quit or do fractional reserve? They chose to do fractional reserve. And then the court was like, yo, that ain't cool. So then they're like, all right, well, we're going to launch a token to make up the difference. So they launched the Leo token. So the LEO token is how they made up for the $600 million that was taken from their Polish bank. Now, if they get hacked again, or, you know, a regulator comes and seizes some money out of another one of their banks, I guess they're going to have to launch another token. And then the question is, how many tokens can you launch, right?
And doesn't that lead to skepticism? Because who wants that LEO? Who's the unlucky guy that loses his Tether and gets a token that then smashes to almost zero, gets bought back up for a fraction of what it was originally? I mean, we've seen this before. People offer you a token for a hit, and then they just kill the token.
You know, it's funny. Well, this is funny because actually this is the second token that Finex has had. They got hacked once before and offered equity in their company tokens to fix that hack. And then they got jacked by the bank for some hundreds of millions. And then they had to have a token to like make up for that one. And you know, the first one, probably their fault. The second one, not their fault. The bank screwed them. So it's like, I showed you the layer of crap that gets you into a stablecoin. In Ethereum, you have another option. You have MakerDAO, which is federated, decentralized to some degree, not perfect, but more so. No bank can come and just say, yeah, we're not giving you the money. That can't happen to MakerDAO. So you know, if you use DAI, that ain't going to happen to you. So you've just got smart contract risk and some people voting on interest rate risk, but you don't have like a bank comes and seizes the money
And so to take some of that, when we were talking about the shit sandwich, where we were carrying over all the sins of the old world into the new world, if somebody wants to make use of a stable coin, what is your best recommendation that you have the least layers of the shit sandwich that came from the old world?
In my opinion, you want someone that's not running a fractional reserve. And you want someone that's got a really good relationship with the banks. So the banks are more likely to make their customers happy and less likely to just burn that relationship and burn their customers. Yeah. So that to me is Coinbase and then probably Gemini. But the volume on that product is like infinitely lower than the USDC product. So I would think USDC is my favorite stable coin by far, because I think Coinbase has the best banking relationships, the best chance of not being a fractional reserve.
And they're the most compliant with the control structure, as I like to refer to them. They're one of the first to do the tax handovers in the States and all of that. So they are the good boy. They're cuddling up. They're the Stockholm syndrome, cuddling up to the cartel. And in essence, what we're saying is you need one of the guys that are cuddling up to the bad guys to have the best security on your stablecoin.
Yes. Unless you're willing to do some smart contract risk and some humans voting on rates risk, and then DAI is okay. But DAI can't even hold its peg, which bothers me. If you have a stable coin that's pegged to the dollar and it never costs a dollar, that bothers me. It just feels bad to me.
No, that's
supposed to be a dollar. I don't like it. Yeah. Or not Tether, I'm sorry, DAI.
And you will always be suspicious that you're on the wrong end. You're paying $1.03, but you're getting 97 on the way out.
Exactly. You're like, yeah, this will be great if I'm paying $1.03 and I get out at $1.05. But if I'm getting $1.03 and then I get out at 98, it's not fab.
Yeah.
But there's reasons why it's trending higher, and I could go into them. So
that's going to be a really useful sidebar point for the guys on stable coins. Which ones do I use? Because I do get asked that a lot. So in your okay, I love that. Yeah,
I want to use USDC. DAI is second best in my opinion, and then probably Gemini's coin that I can't even remember the name of. It might be TUSD. I can't remember.
And they're very Facebooky, very compliant to the control structure as well. So it meets the model of they're going to vote for taxation and all of those other things. So you actually want to, as a crypto, you want privacy, stroke Monero, or maybe you'll comment on other options for privacy. And you actually want to be highly compliant when you're playing stablecoin, because you got the bank risk, essentially.
Yeah, for sure. And I mean, look, ideally, you don't have the suck of the dollar price being, look, if you're tethered, you are losing to inflation, and you're not getting paid yield on your savings, and you have counterparty risk, and you don't have FIC insurance, and you still have smart contract risk too, and blockchain network risk. Like, that's a lot of suck to endure. So you really just want to be tethered to sit out the bear and hop back in to the hot bull. And I think we're there, it's bull time now. NASDAQ's all-time highs, NICE doing all-time highs, Dow Jones doing all-time highs. Okay, everything's doing all-time highs.
Stimulus to come.
Helicopter money, let's go.
Yeah, the stimulus is coming. Okay, good. So that was interesting discussion around Tether, but it's still the biggest, isn't it? So you were probably saying it's the riskiest, but it's the biggest.
The Asians love Tether. They love it. And they've got first mover advantage. I mean, they had several years of being there first. So.
Yeah.
So Ripple, do your damnedest.
Sure. Ripple, like Dogecoin, functions. You can send money from one place to another. You can send it quickly. Yeah. So, a lot of people will tell you it's the worst thing in the world. I'm not going to say it's the worst thing in the world. It does have utility. If you want to get money from here to there quickly and you haven't heard about anyone getting hacked, it seems to work just fine. What I have a problem with XRP is that the reality doesn't meet their marketing pitch. Their marketing pitch are banks are going to use us, screw all the other cryptos. We're getting in with the banks, and the banks are going to give all their money to us, and it's going to be fabulous. And then you actually look at what's happening, and no bank uses them at all. And when they do use them, they don't use the actual XRP coin. They use some ledger technology that just happens to have a similar name to confuse people, right? And then they're constantly dumping on everybody's heads. So they've got like a building with, who knows, 100 people there. Guess what? If you have a building with 100 people there getting paid salaries, where do you think that money's coming from? Dumping on the heads of retail. It's a negative externality, just like the Bitcoin miners, dumping on the heads of the people that buy to pollute the environment. So the less negative externalities you can have, you have less attack surface, you have better price performance.
But hold on, if we're criticizing, I'll just be devil's advocate, and I'm no fan either. But aren't they a perpetual ICO, which is a bearish comment? But on the office and the staff, well, Ethereum has devs. Who's paying them? Nobody does something for nothing.
Oh yeah, that's part of why the ETH price goes down as well. That's part of why ETH drops 95 instead of 85, is because they have more devs eating that cost. So yes, it is.
Okay, so in essence, that's a universal criticism, though, then, for anything that is getting any form of work done on it. The only difference is in the Ethereum sense, we're thinking there's value add coming on all those additional features as a platform, while in Ripple, what's going on with those 100 staff? What are they doing?
Exactly. Yes. Okay. If I explained to you how stupid Bitcoin was, you wouldn't believe me. Watch this. I'm going to blow your mind about Bitcoin. Bitcoin only does two things. It literally has only two functions that people run. They either mine inflation and mint new coins, or they send coins that they got from those guys. And that's it. That's it, man. There's no other functions. You can't do anything else with it. You could do edge case things that no one ever uses. Do you use multisig? No. Do you use time locking? No. Okay, well, then you just use the send button, and the receive button is not even a button. Someone else sends to you. You just happen to receive. That's how simple the Bitcoin network is. It's literally just a piece of software that has two buttons. One is called mine inflation, and one is called send coins. That's how simple it is. The thing I built just introduced a new one called lock up for certain time and get paid more. But it's the same thing. That's all these things do. People think they're complicated and hard. No, they're very easy.
Yeah. No, I like it when you distill simple things. So what else about Ripple? All the detractors will say it's very clearly the banker's coin. They've gone out to court that. They wish they were. Is it a sense that they wish they were? Because they've almost paid Microsoft to, many people have said, and then they announced this PR, we've been taken up.
Yep, because they want the pump. They have the swell event. They get Bill Clinton to talk. They hope for the pump so they can sell into it. Listen, you're going to love this story. It's a short one. Ripple bought shares of MoneyGram. Ripple, a digital currency money transmitting thing, bought shares of a legacy money transmitting thing.
Old school, yeah. I saw that.
The MoneyGram price went up and the Ripple price didn't. Can you imagine capitulating and buying shares of some legacy garbage you're trying to replace, and their price goes up and your shitcoin doesn't? Oh, no. Boy, they had to be mad on that one.
It's embarrassing. It's almost like you're riding a donkey and someone brings you this beautiful out-of-the-box 500cc Enduro motorbike, and the guy says, I'll rather stay on the donkey, thanks.
Their first wrecked. The Ripple chart is wrecked.
Yeah, it's a terrible technical chart. But they seem to have a cult of people that are very, very for them. I don't know if these are paid PR bots or whether they're people that are in a beliefs mindset. What we can say is it does move money quick. So, I mean, it's not all just shitting on it. But why do these people think they're going to come good? Because IMF is going to adopt it or something? There's just rumor and PR.
It's easier to scam people than convince them they've been scammed. Yeah, it's the James Randi calls it the tragedy of the scammed or something like that. Yeah. So if someone buys a bag of something and they're told it's going to go to like $500, doesn't make any sense at all. But they just, some stupid trader person pulls some number out of his ass and he's like, $500 for their stupid coin. They will get that as a shelling point in their head and they'll lock onto it, and then that's what they'll be thinking about. Yeah. And then you ain't going to get shaken free of that, because once your bag's down 80%, 90%, you're like, oh, well, why the hell, I'm not selling. Why? Because you're down 95%. Even if you sold, you wouldn't get much money back. So you might as well hold your bag and hope and keep.
Yeah, hope is the thing. Our prediction is that it continues to find its way down the list, but the next by market cap is actually quite huge. And I'm not overly bullish Bitcoin Cash, but I think maybe one of the new ones, maybe it's Chainlink or some of the others, And you'll of course mention Hex in the market cap. We're going off this, but I just can't see it really making progress. Even if its utility is good, and let's say it's proven to be one of the quickest, I don't think that means appreciation, because there's that differentiation.
Doesn't mean it at all.
Yeah.
I'm going to share something with you that I'm very proud of. I think that there is a fundamental analysis that can be done on these coins that will allow you to get outsized performance in your trading. Bitcoin took money from people that believed in it, and then they ran out of money. Gold bugs and anti-government guys and libertarians emptied all of their excess capital into Bitcoin, and then they ran out. And then what happens? You get run up, you get blow off top, there's no new buyers. Whoa, you get your dip. And then you wait for a while because those guys are out of money. The low-hanging fruit of libertarian gold bug money was taken. And so along comes Ethereum. World computer, unstoppable computing, soy, kumbaya. What happens? Silicon Valley, VC money, new narrative, people that haven't been blown out and bought the top yet. A new narrative to onboard new money from a new type of demographic of user. Sucks all the money up. Blow off top. Oh, no buyers left. 95% drop, right? Now, we're waiting. We need more bag buyers. Okay, who are we waiting for? Yield farming.
Oh, okay.
Well, institutions actually got in on the CME. So the day of the 20K top was the day the CME launched. Ooh, who knew? The day of the 14K top was the day the Plus Token Ponzi founders got arrested, who netted $2 billion of crypto. Net. Took in probably $8 billion and funneled it off to their scam partners. Kept $2 billion net. So technical, I love it. Love me some charts. Fundamental, you could have sold the CME, because guess what? The top on gold, when gold launched in the CME, was when it launched as well. And then it just died for a very long time. And so that cabal, like fan fiction kind of like conspiracy thing is in some people's heads. Are they going to use price suppression? Is Bitcoin going to be treated like silver? I don't believe it. I think it's easier for everyone to get rich long, and all those guys in the cabal are already rich getting long on a lot of stuff. So they would tend to just treat this the same way. You make a lot more money long than short, which is why there's no shorts left in legacy. Anybody that tries shorting in legacy gets annihilated. Even if you short an actual Ponzi scheme, even if you short an actual pyramid scheme, like that one with the sheikhs.
Well, Druckenmiller shorted Tesla. He's a famous trader. And these were when we were talking about the $180 days. That's before the stock split and the run to just wrecked. I mean, he did get out long before all of the major moves, but a lot of people did. And I say, don't short a control structure business.
If you short your mathematics, because they keep printing money. Let me tell you how much worse shorting is than longing. I'm going to explain it in a way that blows minds. If you bought Bitcoin at $1 and you put in $1 and you held it to 20K, you made $20,000.
Yeah.
But let's say you didn't put just $1. Let's say you put in $20,000. You bought 20,000 Bitcoin for $20,000 and you sold the top. A miracle. You made 20,000 times 20,000. That's $40 million. You made $40 million on your 20 grand long. Now, let's say you took the same 20 grand and you sold the top. You sold $20,000 Bitcoin. Congrats. You shorted $20,000 of Bitcoin and you held it to zero. Bitcoin goes to zero. You close your trade at zero. How much did you make? You made 20 grand on your 20 grand. So what's bigger, 40 million or 20 grand?
Yeah, you can't get more than 100% on a short. You can't get more than 100% on a short. And that's selling the perfect top.
As soon as you do that, apply the same leverage to your long and watch it run away even farther.
Yeah, exactly.
Good. So cash. What's your take on Bitcoin Cash? Maybe we should encapsulate Cash, Litecoin, BSV. I call them the sort of the Bitcoin looky-likey complex. There's a lot of differences. I don't know if you segregate them anyway.
Copy paste of Bitcoin.
Yeah. So copy and paste.
Very little to no innovation. Or very little.
I warn, the one thing people say, the magic of Bitcoin is it's totally unique and limited in number. And then we had these forks. that occurred. And I said, well, this is quantitative easing for the crypto realm, because essentially you've got very similar to Bitcoin, looky-likey Bitcoins that have now been proliferated, and all Bitcoin holders got those. And the notion of scarcity, actually now we have a bigger pool of very, very similar. It's kind of like saying, well, they're not exactly the same. Well, it's kind of like I'm selling you lamb, and here's the flock of sheep, and there's a few that are black sheeps and white sheeps. Before they were all white, and then you got a couple of black ones. They bleat, you kill them, you get mutton chops. At the end of the day, it doesn't matter too much, but on block size and all of that. So are we truly got that scarcity thing as much as everybody loves to say it? Because right now there's some echo chamber voices that are exceedingly bullish, and that's all about the absolute scarcity. And I'm kind of like, I feel a bit frustrated, because actually I am mega bullish, and technically and also fundamentally, but I'm not buying complete sizzle and losing the head. I'm keeping that door and window and saying conceptually there's a lot of things that aren't exactly like people are saying.
There's a reflexive relationship that, how do I explain this one simply? The Cambrian explosion was when there was little life, and then boom, now there's all types of life. There's shitcoin Cambrian explosions as well. And so when you look at a closed system where people are just, the winners are taking money from the losers, which is what these systems are. It's all speculation is a closed system. If you're making money, you made it from somebody else.
Yeah. And
it's okay. I mean, there's emergent positive properties out of good, wholesome, healthy zero-sum games, because that's how you allocate resources. If you look at, so let's take crypto as a closed system. Guy hears about Bitcoin. Oh, I can't wait to buy in. Puts in $100. And then he goes, oh, there's 2 more coins. Takes his Bitcoin, buys 2 more coins. But he really only put in $100 still. And so the economy of crypto really still only has that $100.
Yeah.
But the numbers, the notational values of those other 2 things will keep going up. So you keep seeing paper gains. And that's awesome. It's fine. It's like a jewel thief for a battery. You can keep you can keep getting more voltage out of a battery as it's dying by taking more amperage out of it and trading the amps for the volts. It's like a bat, right? Like if you take some weight off it, you can swing it faster, but you don't have as much momentum, because momentum's force times the velocity. So like, well,
mass times velocity.
Right. So my physics, it might be like mass times acceleration. Anyway, so the issue is you have this reflexive system where people will put money into crypto, and then 1 million shitcoins launch, and then everyone FOMOs all the shitcoins, and everyone's numbers goes up because everyone's traded versus everything else, and it amplifies the blow off top until there's not enough new money to support the selling pressure of the guys that are getting mad gains, and then you fall like hell as it all collapses and the bubble pops. But so many new people are in the ecosystem that where you land is higher than where you started. And you get this oscillation, bubble, pop, bubble, pop, bubble, pop, at forever increasing heights. Because even though you have all that trading of all those people, some people buy tops, sell bottoms, get wrecked. But the guys that got their money keep some portion of it in the system. And so the system keeps growing a layer of sediment, like an old city, like Rome. And you keep building on top of these layers of wrecked plebs until eventually you've got this amazing city-state that can compete with governments and change everything, because we endured the oscillation. And it's the only way to keep building the liquidity to the levels needed to really make an impact globally. So this oscillation I'm telling you about is when you propose the idea that a coin is going to be less valuable because other copies of coins are there. In a lot of economies, that might be true. But in crypto, that is the bullshit that keeps those guys from withdrawing. So as long as they've got some other bullshit to play around with, they keep their money in the system. They don't ever actually withdraw. I mean, if you watch Wolf of Wall Street, it's the same thing. They say, there's a book that came out, Where Are the Clients' Yachts? You don't ever let them withdraw. Hey, we got this great stock tip for you. The money comes in. Oh, we got this other tip for you. We got this other tip for you. They're putting in real money in their pockets. You've got all these paper gains. You go to fucking sell. There's nothing left there, right? Yeah. So crypto is about dips. Crypto is about noobs buying tops, selling bottoms, benefiting the guys with longer time perspectives, oscillating if you have product market fit to newer all-time highs.
But that requires a higher net inflow than outflow. Otherwise, you get an overall farm contraction.
Exactly. So you're having a bubble that gets bigger, smaller, bigger, smaller, bigger, smaller, and it keeps going up. And it's not just crypto that does this. This same mechanic of people's hunting for yield and making mall investment and the Keynesian economics overprinting of money, making credit too cheap, forces people to make bad investments, to attempt to make yield, to outperform the damn inflation. And so the boom and bust cycle ends up with higher GDPs, but ends up with an enslaved population. And then once you oscillate enough, you end up with revolt, is what you end up with historically, usually. So it may work out better in the long run. You may get like 8 or 10% higher average GDP or something, but it does involve some riots in the streets, which happen about every 50 years. And it's what America's doing now. If it wasn't COVID that popped it off, it would probably be something else because we were due, because the people doing it didn't remember how sucky it used to be the last time because they weren't around for it.
Yes, it's a transgenerational thing. That's why the people need to relearn the same lessons. Just going back to this. So what we're actually saying, or what your hypothesis is, the Bitcoin looky-likey forks essentially are going in. It's like being in the casino and you're done with the blackjack table and you're on the one-arm bandit with the octopuses on it. You're not winning, and you go to the other one-arm bandit with the Joker on it, and it's just a new shiny coin to keep people entertained, to retain the money and the interest, thinking they're getting a different set. So they're all oscillating in different cycles, and it's an entertainment arcade to retain money in the system, whilst we rely on further new inflows so that we can ensure, while we have oscillations within that, broadly we're on a higher highs, higher lows expansionary cycle.
Exactly. Okay. You get it entirely. Now, it seems cheap to people, right? When you tell people, you can't pay for coffee with Bitcoin, it sounds like an insult. But then you're like, actually, that's fine. You can't pay for coffee with Bitcoin, Berkshire Hathaway stock either. And then they're like, oh, okay, it's not an insult. It's okay. It's cool. Store value is better. So there's that nuance. You got to give them the truth and the nuance and hope that you can move their worldview along. So when people hear about the oscillating Ponzi, they think it sucks. And you're like, no, actually, that's what we need to build up the liquidity, to give man power over his finance and remove the banksters and middlemen, and let man transact with man with no middlemen and no overrides and suck and friction. So it is a more efficient system once everyone has a wallet. Until everyone has a wallet, it's actually extremely inefficient. You're going to go to your ATM and pay 10% extra, and the guy that sells it's going to pay BitPay percent. Okay, well, that's a lot of percent. You're never going to outcompete anything with that system. But once everyone has a wallet, that changes. Now, nobody's got to pay the middleware. It's beautiful. Furthermore, product market fit. If the only thing that matters to price in crypto is people buying and holding and not selling, you should monetize that, because it's the only thing that actually matters in crypto. And all this other narrative bullshit is hype and lies, usually. World Computer, that was a lie. DAOs, distributed autonomous organizations, that was a lie. Bitcoin, programmable money, lie. Peer-to-peer cheap transactions, lie. Fast transactions, lie. People in crypto are lying and getting away with it. And you go to their websites, they don't even show you the price chart. You go to bitcoin.org, does it tell you the price has dropped 85% 3 or 4 times? No. You go to ethereum.org, does it tell you the price is down 95%, 85%, 60, 70% right now as we speak? No, they don't tell you that. It's a secret. But you go to hex.com, it talks to you about the price, and here's the problem. Because we're more honest about the price, more honest about the volatility, we tell you it can go to zero, we show you the chart, we show you that it's dropped this many times. It's unfortunate that the only other people that talk about price are actual scams. So it sucks, because the site looks like an actual scam, because the only people that are telling the truth about price are us. And then the only people that even talk about price are the scams, who don't even have products. They just talk about price, right? This is all they have.
But it seems like it's a scammy thing to see crypto as wealth building place. You should all be in it for the tech. I'm here for the tech. I'm here for the
storing of the value is the tech, but they're too stupid to realize that. They think that some other, we need throughput. No, you don't. Store of value is the best thing there is. Why do you think gold's worth multi-trillion dollars? The reason the gold is worth multiple trillions of dollars is because store of value is amazing. And it's even more valuable than normal when the legacy system is going to war without votes by inflating the currency and sending your kids off to die at war without a vote, because they just can. They can print the money. If you had to have a war tax, kids would be dying a lot less. because we'd be at war a lot less because no one wants to get taxed for it.
Yeah.
So it would make the world an infinitely better place if there was a peer-to-peer, trustless, open source way to send value from one to another, if there was a way to make yield without counterparty risk and without getting exit scammed and without people having to margin trade.
Where does the yield come from, though? Who's paying that?
Sure. So it's the same place it comes from in Bitcoin, inflation. So where does the yield come from in your bank? Inflating the US dollar. By the way, when you deposit money at the bank, they don't lend it out. It goes on the non-asset side of the balance sheet. It's a liability. When you deposit money in your bank, it's a liability to them. They don't lend it out.
Belong to you.
They use it as an excuse to get free money from the government. They don't need to lend your money. Once you deposit your money, they can borrow a multiple of your money for free from the government. So they don't need your money to get lent out. So the yield in Bitcoin to the miners, which by the way, it hyperinflated for 10 years. How do you think you get from 0 coins when it started to 18 million coins? By printing a shitload of coins every 10 minutes. That's how you get from 0 to 18 million. So in the early years, the inflation was absolutely insane, insanely high inflation.
Yeah.
With Hex, we just jump right. So we get all the inflation with over the first, I didn't tell you, in 20 days, we pay 30% of the supply out. And that's it. It's over. Like the final 30% of the supply is given out to the stakers by shares in the last 30 days or in 20 days. It's worth $1.5 billion right now. That's why the price is like, because everyone wants a piece of that last part. And as soon as that ends.
But it's $1.5 billion worth in current Hex shares right now at its current price.
And if people start selling it, it's going to go down real low. And if people keep buying it, it's going to go up real high. Like it's a very reflexive system. The price moves a lot.
Of course.
So back to the running through our top coins and the majors.
Well, hold on.
And you're welcome.
I don't want to skip this part. You got to know where that inflation is coming from.
Sure.
That's very, very important. Bitcoin inflates to pay miners to secure the network. They have to, or you won't have a secure network. So they have to do it.
Yes.
So Ethereum inflates the currency to pay miners. The majority of the rewards in Bitcoin are from block rewards, not fees. The majority of the rewards in Ethereum are for block rewards, not fees, up until this last month, because DeFi exploded and DeFi uses a lot of gas.
Yeah.
So all of these, every single coin that is ever pumped, that's a proof of work coin, and they've all pumped because they're all worth billions and they used to be worth nothing. So that's a lot of pump to get from nothing to billions of dollars. They've all pumped on that negative externality of inflation being dumped by miners for electricity. So they've all inflated like hell.
And also the hype of crypto as a category, new money as well.
Right, because the new money, so if you have a 4% inflation, as long as you got more than 4% new money coming in, who gives a shit? It's like it's not there. So the inflation rate isn't what matters. It's the ratio of the inflation to new money. And if that gets out of whack, you're going down.
Yeah.
So in Bitcoin, the rewards to the miners, which are about $5 million a day right now, are paid through inflation. And it's that way with every other proof of work coin. And the rewards in Hex are exactly the same, except we don't have the negative externalities of the electricity costs. So we just pay to inflate by the way, if you're an average length, average size staker, there's no inflation for you because it's being paid to you. So it's actually 0% inflation. You're not being diluted at all if you're staked for average length, average size. If you're staked for longer, you're making profit above and beyond any dilution.
Yeah.
Yeah, got you. Yeah. So that's kind of like having a TLT where your dollars are actually linked to the inflation rate, only it's to a legitimate inflation rate, not a BLS faked inflation rate.
In terms
Totally
of
lost my ass right there, man. I don't know either. I don't know.
Oh, no. So there's a treasury that's inflation linked called TLT. So essentially it pays the yield. Yeah, supposed to. But of course, as we've already highlighted, their CPI and real CPI is a fudge in its way. So you're actually getting a more authentic, you can peg your inflation more accurately because it's a fact. Good. So Binance Coin is something that's an exchange coin that technically I find the hardest to call. It's totally counterintuitive. Often the other coins can all be going down, Binance Coin's going up and vice versa. It's an exchange-based coin. Given what you've said about exchanges and the fact that they're just reintroducing middlemen again, I'm assuming you're not overly excited about it, but any comment on it?
Well, I mean, look, we're traders here. We don't give a shit about the narrative and we don't give a shit about the good and wholesomeness. We care about a price chart. So can you make money trading BNB? Here's my position on it. It is curb stomped Bitcoin, curb stomped the shit out of it. And it's curb stomped a lot of coins. But now it's running out of new things to get into because the founder was hyper productive and got into everything. So there's a Binance.com that has fiat ownership in the United States. There's a Binance Jersey, which they just closed because they don't need it because Binance.com does better onboarding. Binance.us in the US, sorry. Binance.com is their one where they do their no AML, no KYC, 2 BTC, but still randomly fuck anyone you know magically. You know, they've also got margin trading plays where they even went higher than, I think you do like 125x or 120 or 133x, something like that, to try and outcompete BitMEX. They launch shitcoins now with no review. So they'll launch a shitcoin like the sushi token that got exit scammed by the founder. He just dumped the founder's tokens that were supposed to be used to development, instantly sold them on the market, dropped the price 96%. I mean, he dropped the price maybe 10%, and then everyone saw what he did, and then it dropped 96%. And this is the company that says that they gatekeep and interview founders and hold high standards. Nope, they're not doing it now because they know decentralized finance is coming to eat their lunch. They know decentralized finance offers better premiums, lower fees, better user experience, no AML, no KYC, vastly superior in every way, has every token available. Decentralized finance is going to murder them. And so they're willing to play fast and loose now and list things that suck and try and build their own fake DeFi competitors to try and get their hooks in to reintroduce their middle fees into stuff that's an open source public good. It's gross.
Okay.
But
I get this. So this has been something that it's now in cash cow phase. It sees the early mover advantage with a no KYC 2 Bitcoin below level. And in essence, as he hyper accelerated and grew into all the areas, so he's cash cowed very well. He sees the easy pickings and it's all hard yards from here. And it could potentially then, as a result, underperform for us.
you got it. Like you perfectly, absolutely. That's exactly what I'm trying to say. Yep. He also has regulatory risk because BitMEX guys just got arrested. So they arrested their technical dude that lived in San Francisco. Can't remember his name right now. The other two dudes are on the run. Actually, 3 dudes maybe. I think there was 4 total, but I can only remember 3 of them. So, you know, that risk is also coming to for Binance the same exact reason. Yeah. They had the same exact setup. Oh, you're no AML, no KYC, sign up, do margin trading. Okay. Well, are you serving US users? Are you centralized? Do you have sufficient decentralization? No. Well,
it's a good time to start donating money to the Republican and Democrat parties, I would imagine, for CZ.
Yeah, he's not going to the United States ever. And also, he went back and edited his ICO white paper to get rid of their coin buybacks. So this was launched as an ICO. It is one of the only successful ICOs, but there's still some shadiness going on there. So I think CZ is a really smart guy. I think he's really made a lot of products and went faster than anyone could even have possibly guessed, and that's fabulous. But as you said, great. So now what? Now what? Right? Now you're the cash cow, and it's all hard yards.
And there's hard yards. Okay, Chainlink. Tell us about Chainlink. It's become kind of like a second wave, super trendy and cool one, and it's the DeFi. Tell it.
Yeah, Chainlink is a market that allows people to sell their Oracle services. And so if you believe in decentralization and trustlessness, Oracles are cancer because it's just some guy running a computer and he can tell that computer to say whatever price he wants. So you ask the Chainlink Oracles, hey, Chainlink Oracles, I'm an Ethereum and I want to do computation on the Bitcoin price. Can you please tell me the Bitcoin price so I can do math on it? And their little Oracle goes and runs a Bitcoin node and says, oh, the Bitcoin price is $13,300. Or he goes, you know what? I'm going to change the setting on the server here. Bloop, bloop, bloop. Now it's $1.30, haha. And then the people running their smart contracts on Ethereum are like, oh shit, Bitcoin's gone to $1.30. Let's liquidate all the longs. But it was a lie. So how do they get around that? Oh, well, we'll use a quorum of a couple different sources. And so now they use 3 oracles. And then if the oracles agree with each other, then we'll do our business logic. And so what does this dude that runs the oracle do? He goes, all right, you know what? I'm going to short me some Bitcoin with leverage. And then I'm going to call my 2 friends that also run oracles, and they're going to short too. And we're going to lie about what the price is. And then this is going to go to 0. We're going to win big on our Bitcoin shorts because we lied about the price. And we're going to lose some money from our security bonds that we put up, but we're going to more than make up for it with our trade. So that's where you're at with oracles. You have how hard are these guys going to collude? And then how much money is everyone going to lose when they do? Because if your blockchain relies on some guys deciding that they just don't want to make an extra 25 million, it's not a good system. So Chainlink is literally just a marketplace for people to sell stuff that sucks, but people need to use and are willing to endure the suck because they're using oracles. There's some, like, if you use Uniswap, which I told you ethhex.com is a Uniswap front end, it is its own oracle. It knows what the Ethereum USD price is because it is the pricing engine. It is the order matching. It sets its own price, and it's the most liquid market. You don't need to ask some computer outside of the Ethereum network what the ETH USDC price is because it knows its own price. You can stay in the system. You can keep the trustlessness. You can keep the security. You can keep the security audits. You can't get exit scammed. There's no custodial risk. It's beautiful. It's amazing. Now, if you go cross-chain, it gets a little harder because the Ethereum network's not running a Bitcoin node, so it can't tell you what the Bitcoin price is, right? So you end up with these Rube Goldberg machines. So basically, Chainlink is a Rube Goldberg machine that people found price appreciation in a Ponzi-like format to sell something that kind of sucks, which is oracles. But you need oracles for some things. If you want to do computation on Ethereum, you do need an oracle to try and measure what's going on in the real world. And if you want to load balance with those oracles, that's fine. But there's no reason to duct tape the token in there. You could have done that with Ethereum. You could have kept their security bonds in Ethereum. You could have paid for the Oracle services in Ethereum. But like all good ICOs, they just duct tape a token in there and make some millions. So.
Okay, so it sounds like
they ran out of the easy to buy. It's basically a meme coin. So if you go on 4chans.org/biz, you're going to find primarily Chainlink threads. So the primary price appreciation of Chainlink has not been its technical adoption. It has been, this thing went up, so let's make it go up more. And oh, hey, look how good it feels to get rich. Let's make it go up more, that kind of thing.
Okay, so fundamentally, you're not impressed with the services that it offer. You think those services broadly are unnecessary, and there's higher integrity versions available already, and that it's a triumph of a bit of a pump. And okay.
Pretty much, yeah.
That's interesting to hear. It'll be controversial, but it's interesting to hear. Polkadot, if I go back on here, this seems to have come out of nowhere, and I don't know too much about it. What's your best understanding of it?
Well, Gavin Wood wanted to launch some improvement of Ethereum. So like, the Cardano founder used to be on the Ethereum launch team, and then he wanted to launch his own better version of Ethereum. And then yes. Gavin Wood wrote Solidity. Also, his team wrote the multi-sig hack contract that locked up $150 million of money that they can't get back because no one will hard fork Ethereum to give it to them. And he wrote Solidity. He wrote the code that is basically the Ethereum network. And they won't bail him out, so they won't bail anyone out. And he also happened to start his own, we're going to kill Ethereum project as well. And so the problem with all these, we're going to kill Ethereum projects is no one really needs what they're building. It's like, okay, so you have a new thing that you think has some features that are better than Ethereum. Okay, well, does it have better security auditors available? No. Does it have tried and true stuff that's already been hacked for hundreds of millions so we know where the problems are? No. Do we need higher throughput? If we need it, we have layer 2s that work now with ZK rollups and optimistic rollups. We don't need to use some new chain where we're trying to, it's just everything sucks. You don't want to launch a project on the new thing, because the feature sets suck, the design tools suck, the auditing sucks, the liquidity sucks, the exchanges suck, like everything sucks. It's all new and it all sucks. But so many people buy it because they just figure it's going to pump that they just pump, right? So like no one's using ADA for anything, but oh, look, it's worth billions of dollars. No one's using Polkadot for anything, but oh, look, it's worth billions of dollars. If you look at the price that people pay in fees, the only two chains that make any money on fees are Bitcoin and Ethereum. And Ethereum makes a lot more money on fees than Bitcoin does. Every other chain is literally a ghost chain. They make $200 a day on fees, $200 US on fees. If you combine chains 3 through 10, it's maybe $1,000 a day in fees, maybe $2,000 total. So they're just ghost chains, but people are just playing the speculative kind of Ponzi game, and the product market fit and adoption doesn't really matter. And the price could be high for a long time, right? Like it's really just If people,
So these comments you're making apply to both Polkadot and Cardano. I mean, I've had someone put it to me, the guy in Cardano, who was previously Ethereum, as you've mentioned, it's probably Gavin Wood or the name, I'm not too sure. And you said high integrity guy, wants to do it right this time, etc. You know, has an answer to Ethereum scaling issue, all of these elements. Are you seeing any sign of delivery on those things that are allegedly going to fix? And he was the technical guy of Ethereum, and now he's gone away, as if that's one of the big brains.
I'm not sure that they have solved things. They might have solved some things, but for me, it's like, let's look at the real market. How many coins launched on Ethereum or primarily use Ethereum now that are over $1 billion? Well, let me count the ways. TRX launched on Ethereum, forked to its own mainnet, worth over $1 billion. And was worth over $1 billion when it was TRX, ERC20. BNB launched as a token on Ethereum as an ERC20, became worth over $1 billion, did their own mainnet. USDT primarily uses Ethereum. Ethereum itself primarily uses Ethereum. So we've got TRX, ETH itself, USDT, BNB, Hex is now top 10, ERC20. I think I'm missing one.
Doesn't matter. That's a pretty full list. I get the gist of what you're saying. First mover advantage.
Proven effective. Works with everyone.
Yeah.
It's kind of like Apple Store. It's very difficult for someone who's not an Apple to launch a device selling items that will compete with Apple Store now. If you came in and had to try to compete, because everybody's already holding the Apple device, they're already using, or every 50% or 40% versus maybe the Google equivalent. It's just very difficult to come third and fourth to this market because it's a scale game. Because if you have the scale, you get the developers and everybody writes for you. And it's a self... Yeah, it's a winner takes all. It's a self feedback loop that just gravitates towards where scale is. And no matter what you swear that you do differently, you've got a hard sell.
Well, look, that's what happened to EOS, right? EOS is like, computation on Ethereum's expensive, so we'll make it cheaper. Okay, well, no one really cares. And now that's it. Like,
Speaking of EOS, it's fallen out of the top 10 here.
Oh, yeah, EOS launched as an ERC20. That was another $1 billion one.
That's the one you're thinking about.
And Uniswap was just over $1 billion a couple weeks ago, and that's an ERC20. So $1 billion ERC20s are the rule of the land.
Yeah. So Ethereum is kind of winning by all intents and purposes on the platform side, just by first mover and scale. So that killed.
It's really good.
Yeah. Monero. Now, privacy. Talk to me. What is your take on Monero? Now, I heard what you had to say about your coin and the wrapper for privacy, but how would you critique just Monero on privacy? Because it stays at number 15.
I think that Monero has the largest anonymity set and probably provides the best anonymity in cryptocurrency currently, and has pretty wide adoption as regards to exchanges. You can buy, you can turn Ethereum into Monero using some websites. You can turn Bitcoin into Monero using some websites. No AML, no KYC. Well, that's a pretty cool use set, right? And really some people would have a better time in court with their darknet market court cases if they had chosen to use Monero instead of Bitcoin.
I have an idea who you might be referring to there. So it's interesting because also the other aspect about Monero that I saw was interesting is that usage on Monero, the actual utility element, has been growing. I've seen some charts on that people are really engaging, and that surely is positive.
I don't have any problem with Monero. I think it's definitely useful. I think their user experience is the fucking worst. If you actually run a node, it's fucking garbage. You're going to get antivirus pop-ups to tell you have a virus every time you upgrade your fucking node. That ain't no fun. Like, oh, I have a virus now? Well, that sucks, right? When they upgrade they hard fork relatively often, so you're always having to install a new node software. You don't have an option. You must upgrade or you can't use the network any longer. You got to wait 16 minutes in between transactions, which sucks, right? You send a transaction, wait 16 minutes to send the next one, dude. Sucks to be you. What else? They have no marketing at all. So I think that they're great choice for anonymity. I respect what they're doing, but for the bull case for it, it's like maybe if you see some people going to jail for some crypto stuff and people start to care more about their privacy, maybe bull case there, But I mean, I know recently that it's gone up a bit, but like I don't really have a good reason as to why, But it's done that before. Like if you look at it historically, the BTC ETH pair is wrecked. Like it's not. I mean, do you want to look it up real quick? Look up the BTC Monero pair. Sorry, BTC Monero pair.
Well, one thing it has done, there's been a lot of new coins that have come out, but it's kind of hung on to its 15th place. And it's actually creeping up on a few, like EOS, for example, that's giving up ground.
Happy to see Monero have a higher market cap than EOS. I think it's much more useful. Basically, EOS launched with default judgment as a service. Like their white paper literally said, if people vote to take your money, we take your money. And if you don't use your money for a while, we take it. Literally. They were like, yeah, that's a good idea. What? This is the opposite of anything I believe in. So
explain that again, because I think while I was getting the chart up, that point washed me by.
So this chart, it looks like cancer for a good while. And it recently just stopped being cancerous. And you're like, well, why? And I'm not sure why. So I don't trust it.
Well, it could be that usage. You see, this is what I'd call a rounded bottom against BTC. From a bottoming point of view, a rounded bottom. And you had a little bit of a squeeze with super low vol there as well, which is actually seen.
How do you see the vol? I don't see vol on the chart.
Low volatility, I mean, not volume. So yeah. Normally when people, it's a trader thing. Volume is volume and vol is volatility. I'm more referring just to that little squeezy there. That was kind of occurring. It's just typical of a bit of a recovery.
Liquidated shorts, when you see those like bananas, you're like, oh, somebody had to cover their short. I've seen these bananas go both ways.
Oh yes, it's not a proven bull market just because it's rounded bottom. But generally, when you hammer out lows, this is the problem you have, that you're going to go further downside. When you're staircasing and you get what these grind lines, we refer to them. These are generally continuation patterns. And you had one there as well. You could put a squeeze on there. When you start to get marginally lower lows, and then you start to stop making lows, there's a bit of a recovery in there. As I say, I'm a bit BTC dominant right now, but of many of the other charts,
4 or 5 month flat bottom is rare in crypto. I can't remember a chart that I saw have a 4 month like flat bottom like that, because that's a strong horizontal bottom there.
Yeah. And I would even say it's almost a bit convex. It's concave, rather. It's a bit of a bowling out. But so, yeah, it's not yet ready from an appreciation play, but I do think that service is maybe going to come in.
If you're charting versus BTC, I think you're fucking up. Because think about it this way. What do you think is an easier target to compete against? The dollar or Bitcoin? Well, Bitcoin's up 1.3 million X now.
Yeah.
No, I don't want to trade versus Bitcoin. I want to trade versus the dollar. It's an easier pair. So like if you look at, like, remember when we measured the hex chart, it's up 200x, and you measure other charts like Ethereum, it goes up 10,000x, Bitcoin's up 1.3 million x. That's versus the dollar. But when you chart ETH versus BTC, you're not getting a 10x. You get like single digit X's. So why screw around with single digit X's when you can have a bunch of extra magnitudes of order? Like trading versus Bitcoin is not the play, in my opinion.
Oh, no. We're doing a relative value assessment as to whether you should have a little bit of it in your portfolio. So, you have 60% BTC because we're dominant, maybe 65. You maybe have 10, 15% of Monero on the basis that you're expecting privacy to become more relevant. And you have the rest Ethereum as a possible idea. And then you have maybe a few spec coins. And some people might elect to have some hex in that smaller percentage. And everyone has also a punt coin, outside the top 10 or 15. Okay, no, that's great. I think we've done a good
run.
I
love this going through the coins thing. I've always wanted to do this. I always wanted to just do one of these videos, but was afraid of pissing everyone's community off because I want him to buy a bag of hacks. I don't want to piss.
We're kind of traders. We try not marry. I try encourage guys not to marry. You know, you got to. It's kind of pointing to somebody else's daughter and say she's got a bit of a squint eye and all of that. It's almost like it's worth picking a fist fight. But we try to get the mature guys on here and try to get some real critical opinion. And what I liked about speaking to you is that you're not afraid to say, look, I really don't like it. It's a pile of shit for the following reasons. And if you can justify that, I'm really, really good with that.
I'll always give you my reasons why I think a thing. I will never.
Yeah, 100%. And depersonalized, more a case of, this is what the service it's serving, and I'm not sure that's needed. We did do Litecoin and BSV, but if we're talking between kind of in the Bitcoin complex, but if you had to choose which is the least bad, because there's quite a few people that still sniff around Bitcoin Cash, that Litecoin had a big week recently and a big few days out of the blue. If you were forced to be a holder of one of the three, which would it be?
Litecoin, BSV, and what?
And BCH.
Okay, this is a hard one. This is a hard one.
It's like who's the least ugly in the ugly contest? Is that what it is for you?
Yeah, I mean, this is a hard one. So first, their market caps are all very high, which market cap's a vanity metric. A coin could surpass Bitcoin's market cap, and it wouldn't have to be that magical to do it because it's just the last price times the units. Yeah. So, don't get caught up in the market cap, but there is a tendency for coins in the top 10 to get knocked out of the top 10 by the new coins. There is a tendency for that. So you can go on CoinMarketCap and look at the historical charts, and you'll see stuff that used to be up top is not up top anymore because something else gets in there, and then it gets out, something else gets in there. So, I mean, if you look at product market fit, what product market fit does Litecoin have? Nothing. Absolutely nothing. Okay, what innovation does Litecoin have? Absolutely nothing. Okay, what development does Litecoin have? Absolutely nothing. As a matter of fact, it's kind of scammy. Hey guys, we're going to launch confidential transactions and bring anonymity to Litecoin. So says Satoshi Light, their founder. And then what happened? Nothing happened. There's no development going on. It was a scam. Okay. So the best thing that happened to Litecoin was that Charlie Lee used to work at Coinbase and got Litecoin listed at Coinbase. And then if you wanted to get into crypto, your option was really expensive Bitcoin or single-digit dollars Litecoin. Well, new guy has $100. He could either have 100 Litecoin or 0.0100 whatever Bitcoin. He'd rather have the bag of Litecoin. So he had a unit bias advantage. So you really have a coin that doesn't serve any utility or purpose whatsoever, doesn't have any meme.
What about the lighter bit? I'll be devil's advocate again. It's faster. It's, it's quicker, smaller.
Is that what we're doing? They just use lumens and XLM, and they use XLM and XRP. They're even faster still. Yeah. Used ETH. It's even faster still. And it's, there's just no.
Okay.
People buy it, the price goes up, and they buy it because the price went up. Okay, cool. But other than that, there's no utility for it. The only thing you could kind of say is it kind of could maybe, if there was ever any more development ever again, that it could act as a test bed for Bitcoin. So Litecoin did get SegWit before Bitcoin did, and that was nice for Bitcoin to know that it was safe to do, but they're not doing dev anymore. So that ain't happening anymore, right? And no one cares about that anyway. Oh, you're the thing that eats risk for Bitcoin. So if it's going to suck for you first. It's not.
It's like being first up for the COVID-19 vaccine, isn't it?
Yeah, I kick the door in. They light me up with so.
Okay. So in actual fact, there's no new innovation, and there was a bit of PR stating there would be. So there's a bit of an integrity question that you're raising.
Oh, and the founder sold his bags on top of everyone's head and made the top. You're like.
What was that actually? When you say sold, didn't it all go to a foundation? Wasn't that tax planning?
The foundation doesn't have any money.
Okay.
So it wasn't just moving it into a foundation so that a future tax planning type thing. Okay. All right. Well, that's
an argument with him. I just made fun of him because he said my thing was a scam. Yeah. Before it launched. Oh, now a year has passed and my thing's up 70x over his thing, 70x. So I went back and I was like, hey, you going to apologize, buddy? Since your thing that you exit scammed on and sold on top of your followers' heads and all that. So I have a public like, yo, what's up, buddy? I was right, you were wrong. Give me respect now. He didn't respond. So now we've got BSV. BSV was launched by a fraud who claims to be something he's not. That's a problem. But they do have people that believe in that narrative for some reason, and they are able to onboard people to that false narrative. And so people do put actual real money into it. Nothing interesting technical going on at all. I don't think you should trust things run by people that lie when the truth would better fit. Like his own mother literally in the newspaper says he's always been a liar. Something to that effect. You'd have to look the quote up. But if your own mom can't get behind your back, man, it's not looking good for you, So it could, because crypto's funny and terrible, horrible things pump, maybe it could pump even though it's the worst thing ever. Maybe the price could still go up, right? But what do you have? There was Bitcoin and someone decided to copy paste it and make BCH. And then fake Satoshi says, hey, you know what? I'm not even going to copy the real Bitcoin. I'm going to copy the fake Bitcoin. And then they can make another copy of the BCH. And now you're 3 levels removed or 2 levels removed, right? You're on level 3. It's like, come on, guys. Now.
Well, he'll assert that he's the real Bitcoin. I'm just being...
The guy that owns the majority of his net worth in normal Bitcoin is now demonizing his own bag, right? So this guy's Satoshi, and instead of improving his bag of his real Bitcoin and writing Bitcoin improvement proposals and logging back into a Satoshi at GMX email and taking back control over things, instead of doing any of that, or instead of buying mining machines that mine Bitcoin, which he used to do, he buys analysis hardware and he's analyzing the network with his $20 million supercomputer. All retarded, nonsensical, makes no sense at all, has never signed any Bitcoin transaction ever to prove that he's ever owned a single Bitcoin whatsoever. None of these things make any sense. If you owned a giant bag of Bitcoin, would you shit talk it and call it fake and launch something with a much lower market cap and then say that was the real thing? It doesn't make any goddamn sense. It doesn't make any sense.
Yeah, it's a hard sell for me to swallow that. I'm just on sniff test. It's not something I'd buy.
People talk their bags. People say good things about the crap they own. That's how it works. If you say bad things about it, it's very unlikely you own it. So I think BSV, because it has more scamminess to it, probably has more price potential than Litecoin, because it's more of a known entity and BSV is newer, so it hasn't gone through its pocket of demographics of people to scam hard enough yet. So there's like new non-scam people that then get in. Everyone's already heard of Litecoin, but they may not have fallen for the fake Satoshi thing yet, right? So these pockets of untapped liquidity, narrative liquidity, are part of the magic of choosing what the fastest horse is going to be. So now you've got the other
BCH, the first fork. So of the 3, it doesn't seem that BCH might be your least smelly.
Sure, I would say BCH is the least smelly and has the best proponent with Roger Ver and has the most innovative development. And there's just an original sin you can't get over. When you give a bunch of people something for free, they don't really care about it. And what are they going to do with stuff they don't care about? They're going to.
But can't you argue, how was Bitcoin? Bitcoin, was it sold when it was originally mined? There was never a free dispersion of Bitcoin, if I'm understanding correctly.
It was free. I mined Bitcoin for free. I used to mine full 50 Bitcoin block reward blocks for free.
So I'm just saying, is it not just a case of you've just forgotten that and you've given BTC at its, it's a long way away from that. There'll never be any.
No, okay.
I'm being devil's advocate.
When Bitcoin wasn't worth anything.
Yeah.
My 50 BTC block rewards that I'm so proud of mining full blocks on my own with no pool, they were worth $25. Bitcoin was only 50 cents at the time.
Yeah.
So really I'm bragging about having $25 and loud fans on my computer. See what I mean? BCH, when it launched at 15% of Bitcoin's value, dipped down to about 7.5, then went up to 50%, and then died forevermore.
I remember that. In fact, I traded that pump to the upside. We had a macro pattern. We were lucky on that one. Let me just get it up as a chart as well. So BC, Whoops, I need the BCH, not against Tether, because we need a bit of history.
BCH, BTC.
Yeah, let me just get BTC, sorry, BCH, BTC.
No, I've got these charts memorized. The only way you could have traded this when it first launched is you had to trade futures. So OKX had futures, and there was one other place that had futures. Or if you wanted to deposit your coins on the exchange so that they were available when the fork hit, the first place was HitBTC. And then, Coinbase came along much later, and BitMEX came along much later.
Let's get a longer history. I'll just grab Phoenix's one. Yeah,
All right.
that takes not.
I mean, HitBTC is the longest. I mean, HitBTC was trading before the fork happened. But anyways, probably okay.
Yeah, so it has, yeah, broadly since February, where it was last had a peak high against Bitcoin. This was a key structural technical area that it's clearly let go of.
Yeah.
Which it,
Retest.
and then it had your dip and then your retest, and then we've been down, and we're making, we've recently been near lows. You said it was 15%. That's a 0.019. That's 2% essentially.
Yes. Right.
Yeah. So
it used to be 50.
and
It used to be 50%.
yeah, it traded up at 50. In fact, yeah, wow.
I think it was like $8,000 per Bitcoin Cash. So you could have sold it for 8,000, and now you can sell it for like what?
I'll get a
$40
BAP.
You had four. I'm not sure you the thousands are right. 516 I've got in that history dollars. You might have traded 1,000. I don't think are you sure about that 8,000 number? Which exchange do
Be
you
wrong on that. I'm just guessing. I know the percentages versus Bitcoin. I don't remember the USD price that much.
Yeah, I think it got deep into.
Yeah, you know what? It forked earlier. It didn't
Yeah.
fork when Bitcoin was 16,000. So what was the top on it?
on the Bitfinex? I think I've missed the big bull market.
I
I'm
don't
looking.
think that chart you're going to goes.
No, I've not got the history. I've not got enough history. I need to get it just.
Go to Hit BTC. If you go to the Hit BTC BCH,
Is it a BCH on Hit BTC?
Yeah. The only people that use BAB is Phoenix, I think.
Yeah, Hit BTC. Which UOB? I can't find that exchange. USD. Is it a USD, not a tether pair?
it's BCH BTC pair. I'll look it up too.
But we're looking for a fiat value, eh? On Hit BTC. There you go. Calculated by
Looking for date. I want to know when the date was, where the top was. Yeah, so I'm showing. Okay, stamp isn't the right chart.
You're right about the thousands. You got 4,000 on this one.
Okay.
4,000 high.
And
So I said 8 originally, but it was 4. Yeah.
Yeah.
So yeah,
And
you
then-
used to be able to sell it for 4,000, and now what can you sell it for?
273, which is 1/10 and then half again. So it's at the 20th of what it was. Yeah.
okay.
Pretty flat bottom. But it's the least bad of those things. So actually, in
Technical, but not from price. So from like grossness, it's the beast. It's the best. It's the least gross. There's a real effort, real dev, real guy behind it, real stuff, right? But for price, when Hex gave free coins to Bitcoin holders, $3 billion of Bitcoin holders minted their free Hex. But I did it smarter than the BCH guys did. The BCH guys gave the Mt. Gox trustee, who has he had 180,000 Bitcoin Cash. He had 180,000 Bitcoin. He dumped them right on the market, which is the only thing he could do by law. Sell, not buy, sell. So how was giving 180,000 Bitcoin Cash to some trustee in Japan to sell on the believers' heads? How did that make the world a better place? Terribly stupid idea. And he sold 40,000 Bitcoin Cash on top of everyone's heads, right in the middle of, it was like February or March of 2018. Helped shove the price down.
And that was because they were trying to recoup the money of the hacked coins. I'm assuming they were under administration. Yeah.
Money, but they're hurting the chart. You know,
Yeah.
I'm glad the Japanese dude's got more money in his bank account now, but they're hurting the chart. So you can't get over that original sin. When you give every hacker and every exit scam and every trustee a bunch of free coins to sell in the market, how in the hell do you think that that is going to work for the price? And so you have just death forever, and you're going to keep having it until finally, like, you just can't get over it. So how did we solve that problem? We put a time limit on it. If you get in early, you get a 20% bonus. If you don't get in early, you start bleeding your ability to claim. So if you get in at half of the launch phase, your stack is already cut in half and your bonus is cut in half. And by the end of the launch phase, there's only 20 days left. In 20 days, you'll have nothing free to claim anymore. And on the way there, it just every single day chisels you away. You get less bonus, less coins, less bonus, less coins. And what do you end up with? Now, when the project's top 10 and mega successful, and the scumbags come in, the whales that didn't do a damn thing to help you, they come and they're like, oh, I owned Bitcoin. I had bag of Bitcoin. Now I dump price because I'm privileged. And they go to sell, they don't have any hacks to sell, because when they claim, they get like this tiny little sliver because they weren't in early. But in Bitcoin Cash, imagine if they had done well and super duper marketed and everything worked out fabulous and they had good product market fit and they got the price to go up. All those scumbags that didn't do anything to help the project get out at higher prices and get to hurt the people that believe in the project more. You can't ever recover that original sin of rewarding a bunch of people who don't have goal alignment with you. They're anti-goal alignment to you. They want to sell more the better the price does. In hacks, the better the price does, the more people want to hold. It's opposite.
Yeah.
So.
Yeah, it was democratic, but it wasn't smart. I don't think democracy is always smart. It's a bit harsh to say, well, if he's holding Bitcoin, you're not giving him his coin because he's Mt. Gox.
But
how is giving Satoshi useful? What did Satoshi do for you lately? I defended Bitcoin versus attackers, corporate attackers during the block size wars. I defend Bitcoin on television. I tell people how to do Bitcoins the right way by sending transactions that are smaller. I help people not lose their keys, to use audited things. I'm kicking ass for Bitcoin. What is Satoshi doing for Bitcoin? Not a damn thing. Nothing. So why did you give him more money? He didn't deserve it. He didn't earn it. It's retarded. You need goal alignment, incentive alignment to get people to do the right thing. Bitcoin doesn't have it.
Oh my! One of my favorites sayings is, you get the society that you incentivize, and in any community, whatever you incentivize, you will get. And I think the death of our existing over-indebted system, which gave overarching socialized downside on the citizenry, but privatized capitalism for the bankers, has done us untold damage. But that's how you set up the incentive and structure, and that's what you get. You get an insider class that are raping the peasants. Absolutely.
Interesting. There was another theorem that I can't remember the name of, that the control structure of your organization will then mirror itself in the product that you build. So the products you build will end up having the properties of the organization that built them from a control perspective. And so your coin will kind of be the same way. If you incentivize buying and holding, you're going to get a certain type of person that loves that and is involved with it and loves to stick with it. Whereas if you incentivize in and out kind of churning, because I can tell in your community, you're aiming for something that has 3 times, 4 times a year kind of perspective. Which is nice because it reduces the
churn,
the house advantage against you.
Yeah.
So let's just do Lumen and Tron, and I think that's as far down as I care go.
Hex is up there. Hex is top 10.
Yes, you will still tell us a little more about it, I'm sure, given all the opportunity, and we have already taken, and I will give you a chance. Stellar and Tron.
What happened to
Stellar's main advantage was that it was going to be XRP, but better. So fast transactions, centralized database, was going to be more open. And then, it just didn't work out. They tried an airdrop to the blockchain.info wallet guys, and then you do chain analysis, and it just looks like everyone sold their airdrop. they got hacked. They had an inflation bug. Hackers stole money. So then the foundation burnt some coins to make up for it. But in effect, all that did was give the foundation a higher percentage of the coins. Like they were supposed to give them away to other people, but instead they just like burnt them. And then they ended up with a larger percentage of the ownership than they had previously. There was 80% of the supply in a foundation. I'm not sure where that sits now. So it kind of lost its pump and it lost its like chance to really do cool stuff pretty much. So.
And from a development point, is there any chance anything technologically is going on there that could see us get something?
It's just XRP, but different. It's mostly centralized ledger, so it's just fast.
Tron, if I...
Tron is like, a copy paste of Ethereum that focuses on Ponzi stuff, basically. So it's centralized server infrastructure, less decentralized. The only thing they have is stuff they've copy pasted from other projects. It's like if you go to buy Coca-Cola and then you go in the bottom shelf and there's that shit that kind of looks like Coca-Cola but doesn't taste that good. Like that's Tron compared to Ethereum.
There does seem to be a lot of that. I remember seeing somebody took a picture, I think it might have been 2010, 2011, and it had one of the early coin market cap top 10s or 12s. And basically the bulk of those coins, none of us have ever heard of and I don't think exist anymore. And from the way you're speaking, I can't help but thinking that if we have this discussion again in 10 years' time, there might be one or two that are still kicking around, and then the rest are just sort of lost in the ether of being bad copies, looky-likeys, descaled versions that thought they had a unique idea and never really made it. And it kind of reminds me again, and I remember the EOS launch during Consensus. I don't think they'd ICO'd yet, but they was 17. But they were going to, and they'd already raised an absolute shit ton of money, and we were sitting there and we were drinking free spirits on top of the New York whatever beautiful view, entertainment, free booze, have whatever you like, and it smelt like .com fever all over again, but it was very specifically niche to the crypto realm. And I remember saying, I've seen this movie before and most of this won't exist. No one who's thinking about real hard economics is thinking that there's any value to me drinking their liquor, being entertained up here, because I'm not doing anything. It just didn't seem like prudent handling of money. It was all about...
They just waste the money. And that happens all the time. Look at how many millions was wasted from 2017 ICOs. Where'd all the money go? Hundreds of millions. Over and over and over again. With nothing to show for it. Over and over and over again. You're like, how do you spend that much money? It's crazy. You'd have to spend all day, every day wasting money to waste 100 million. Like it's hard. It's actually hard to spend 100 million.
And I remember talking with crypto news Omar and saying that there still needs to be more of a clear out. And I've not felt sufficiently that sufficient things have really been cleared out for not really having a modus.
%, and then we drop COVID drop and we're good. We're down for years. It's enough. We're fine. The weak hands have sold. When you want to know how many funds had to close on that COVID drop, Adaptive Capital, which was Tur de Meister's fund, liquidated. Willy Woo's fund, can't even remember what it's called, liquidated. Everybody got annihilated on that COVID drop. The price wouldn't stop going down. The price went down so hard that BitMEX had to turn it off, or else it would have kept going. The liquidation engine would have kept shoving down until $100 Bitcoin. So they either turned it off or they got lucky and the server finally had an error and let the liquidation chill for a while and let the market kind of chill. It was insane. Because everyone, low leverage longs just got annihilated. It was a multiple sigma,
I absolutely remember that. But I can also say, I don't know if you recall the Ethereum major move up. Actually, Ethereum on a number of exchanges traded $1 when it was about $27 or $28. Often before big moves, you seem to, and this is going to get the suspicions going, you get a very harsh shaking out to the downside before you end up getting the upside move. And the COVID-19 almost looked, and we can sort of saunter back to the BTC.
We did this in the 266 drop, back when Bitcoin was 266. it had an exponential run up, and then it had a murderous, 40% dip. And so that's what a lot of people were looking for, is kind of a candlestick pattern to hope for a fractal that, hey, this is the end of the bear market. But what screwed us up was the plus token Ponzi. The plus token Ponzi took us from 3K to 14K. Founders got arrested, day of the top, and then we had to find a new bottom again. And it really screwed the charts up. So two things really screwed up the charts.
But this was the plus token. The plus token was here on the pink.
Left a little bit. The 14K. It should be the
Yeah. That's what I mean. Yeah.
The one to the left of that. That's the 14K there, I believe.
You want the exact candle. Yeah. Okay. That's fair enough.
That's the 14K, yeah.
Yeah.
So
That was the plus token.
We got the 20K. Now look, we had dead cat bounce, HVF into trapdoor, because whoever was trying to defend the price to hold us at a high enough market cap to stay listed and hope for ETF, I think was the narrative for that. They lost their ability to maintain and then had to capitulate. And we got this trapdoor. So dead cat into trapdoor. We've never done that pattern before. That right angle trapdoor crap, there's nowhere else in the Bitcoin chart that has that. Then we got this plus token Chinese Ponzi that no one knew in the West that was going on. Literally nobody knew. I'm an expert in the space and I had no idea. That's how isolated China is. You're like, wow. So there's a $8 billion buying up Bitcoin. They have 2 billion net after paying, their partners. God darn, really? And now they're like selling. And you can do that. You can follow the wallets around. Man, I didn't know. So this move that you get here into COVID, which was just doom. I mean, the COVID is a longer run than the fallout capitulation from 6K to 3K.
Yeah, I remember that very well.
Faster, murderous, wiped out every single possible long. When you wipe out all the longs, you don't have anyone taking profit anymore because no one has any positions. The only positions are spot because they all got wiped out, right? So it clears up your price discovery. So it's lighter and easier to go up after such a strong capitulation.
Yeah.
But the interesting point about that is if we just took it out as because of its Bitcoin's liquidity, when people are facing pressure in the real world, this is something that quickly turns into dollars when they need it. And in that sense, people didn't sell their homes in that time when they were in the distress. The easy liquidity goes first. And we were essentially here. Well, let me use a different color than the blue, but we were essentially, and fatten him up, we're essentially here. And in the end, it turned out a big ass round trip because you ended up back here. But all that happened is you shook up the share register, so to speak, in one of the most extreme ways. And that
kind of hilarious. You're like, everyone's out of work. Everyone can't fly. Entire industries are out. Can't sail. That like yacht industry gone. Airlines gone. Restaurants gone. Sports gone. You know what? Let's go do all-time highs on everything. All right. Nothing rigged with this game. This makes total sense. Let's go do new all-time highs.
Yeah, it's fascinating. But I do think that's a bit of an extra norm. That blue box zone, it just feels like it's a cutout. It's almost was a shakeout that you almost should ignore because in a sense, we were in a volatility squeeze here. These tops are coming down. The bottoms are coming up. And then you had this one outlier event that's brought in.
It's like the world's biggest pennant.
Yeah, it's just this huge hammer, basically, because you've gone right the way down and reversed all the way back up. And it's almost a single event.
Give me a measured move to the upside with that flagpole from 266 to 20K.
well, in essence, in a sense, it's also a bullish signal because it showed that it couldn't be held down. It returned right back to where it was. And what you typically do geometrically, you might again do to the upside. So if we look at that, that's about 10K and you went to 4. It's a 6,000K move from the 10K mark on its own, which will get you approaching all-time highs as well.
Why not? Why not do all-time highs? We were down long enough. The macro situation couldn't possibly be better. We're getting new money coming in potentially from these larger entities, right? Like Square bought 50 million of Bitcoin. Michael Saylor, holds like 30K Bitcoin himself, and his company bought, 250 million worth. He, okay, cool. We got some new narratives to bring in this new pockets of money. And then once it goes up, it tends to keep going up. Like I'm happy with all that. I'm cool with all that. And all the alts will run farther.
Yeah.
Just chart it. If you chart ETH BTC, it's up. You want to pull it up real quick? ETH BTC?
Yes, sure.
I'm quoting a 2.5x over performance from the bottom of the COVID dip. Let's see if my memory's right. It might even be higher now.
Well, it's lost ground a little bit recently, but it has done rather nicely since these bottom lows. This is what we refer.
Shift and click the bottom. You can just drag it to the top to measure. Just shift click.
Yeah. I'll do that timestamp that you liked. I'll probably just change it to daily as well to give you a bit more detail.
All right.
You're referring since the low.
The COVID dip. 86 from 86.
Yeah.
Well, this is FBTC, so it's in sats. It actually traded I call it in percents, 1.6% really of a Bitcoin at that point. And if we just put the timestamp date range that you like, since then, you're up 80.64% from the lows on Ethereum. And that's catching Ethereum at a bit of a bad period. We're seeing a little bit of a counter trend down leg against Bitcoin right now. But over the longer term, we're also pretty bullish. And it seems that you overall, if you take it to the high, you had 151.7%. So 2.5x, as you were saying, is roughly right. Yeah.
When you guys are watching, when you do your measured moves to the upside in TradingView, it doesn't count the first 100%. So if you get a 50% move, it's 50% profit. But if you look at your multiple, your one thing would have turned to 1.5 things. It's a 1.5x. So you have to add an extra 100%.
Yeah. 2.5 times. Yeah, I've got that. It's pretty mathematically consistent.
It's a lot.
So, I mean, essentially,
this isn't a lot of months to do a 2.5x over Bitcoin, and Bitcoin's gone up. It's a lot of performance.
absolutely.
And that's 1.6% to 4%. It's pretty high.
A lot.
Yeah. But at trading down now for now. But we'll see. I think longer term, this one keeps making higher highs. I think we're just catching it on a higher low leg at the moment, a pullback. So it is technically very interesting.
We could retest if you're doing horizontal lines, we could retest and do a little Batman pattern into your blue line at the bottom there, where it looks like you got some bids waiting maybe.
Yeah, I've got a lot of annotations on there. I'll just pull it in a little bit. By the way, I think on the longer term, this is, let me just show you this because you like this chart and you recognize and understand heads and shoulders. I'll just hide some of the text. In fact, I'll just take it all off and just redraw it with an overlay pen. The really interesting thing about this 4% here is that we've now met that same level. Let me do it with a straight line. That's a bit savage a draw. You're at the 4% there. You've got a left shoulder that I've already illustrated. You've probably got this here. And this down leg is no bad thing if it finds support. It probably finds support somewhere here or even a bit earlier and returns back to the 4%. You actually get a targeted projection from around the 1.6 to the 4%. You're going to find yourself another 2.4% to the upside from the 4. So that'll quickly take you to, somewhere up here, 6.4. I've log scaled that, so it looks smaller than it is. Let me just go regular, and I'll have to redraw it. But you get what I'm saying. 6.4 up here. So you could be just making the right shoulder of an inverted head and shoulder because you have a very clear delineation of a neckline running here.
I like it. Yeah. I think the fundamentals are right. I think technicals are right. There's just nothing. It has everything you want. I'm really happy with the ecosystem.
Yeah,
I like what you've endorsed because essentially I'm switching to an ETH bull, as I say, short term, not just for the Bitcoin bias now.
Sure, and you got some fallout from some collapsing of some of those little extra ticker symbols on the roulette wheel. So some of this DeFi stuff, it gets hot and then it overcooks and then you have a pullback for a while,
And that's what gives you your staircasing up. Yeah, there'll always be a little bit of unwind. And it's almost better for it that it has these occasional bloodlettings rather than it has an absolute moon shoot and then has to go through a 2-year bear again or an 18-month bear, because that is absolutely killer for it. Great. Richard, generally...
It exceeds people's pain thresholds. People are okay with 40% dips in crypto. They're really not okay with like 85% dips. They're not fans. So there's an ideal amount of pain threshold that keeps people playing.
Yeah.
The ball breaker line kicks in at the 60%, 65% mark. I think anything beyond that, and it's a real testicle masher. Okay, big events maybe of a fundamental nature still to come. Thanks for the run through on the top 10, by the way. Anything else you see? Let's take your mind away from the technical.
What's going on with OKX's founders in jail? No withdrawals. Biggest cold wallet in crypto history, like hundreds of thousands of BTC cold wallet. Are those going to get sold? Are those never going to get sold? What about Mt. Gox trustee? They were going to give their 140K BTC out to people. What are they going to do? Sell? Okay. Well, they delayed it. Thank God. Thank God. Well, I hope they keep delaying it. I hope the people that lost money in Mt. Gox never get their money back. Because if they do get their money back, they're going to sell. So I hope they never get it. Sorry, guys. I hope you stay screwed for my bag to hold more value. I want Bitcoin to be worth more, not less. And if the Mt. Gox trustees hand out those Bitcoin, they're getting sold.
What kind of number? What are the numbers? Remind us.
137,000.
137,000 Bitcoin. Yeah, that's a lot to absorb.
I think that's, I don't even know off the top of my head how much that is.
Yeah, no, it does times by 13,500, basically 14,000. So it's a god awful amount. And
it's 1.8 billion. That's a big deal. Like that's like a 30% drop in Bitcoin price, maybe. Depends on what multiple you use. Like so the Fundstrat guys analyzed in 2017, and they said there was like a 40-to-1 multiplier of actual money going in or out versus price movement. And then Willy Woo said it's lower than that now because the market's changed. So maybe it's like 20, I think. You'd have to check it. How much you want to trust a guy whose fund got wrecked to zero, I'm not sure. So if you take out 1.8 billion of real fiat out of the Bitcoin liquidity, how much is the actual dip? 30%? It's going to be brutal. Now, not everyone's going to sell, but
what about institutions that are coming in and putting in more than that amount of fiat? Could it, global dimming, global warming, they
can I can only predict one of them, right? So like if they didn't sell it on the market and they had it open to auction like they did when Tim Draper bought the Silk Road seized coins, and I think he bought them for like 110 million, maybe, if my memory is correct, just a long time ago. If they have that type of auction that doesn't market sell into the market and it just eats new liquidity that's willing to OTC over there, then it could have a much lower impact on the market. But this guy's already sold into the market before. He did OTC deals that ended up hitting the books and hurting the price. He hurt the price a lot in the first quarter of 2018.
Right.
So, it's like there could be nothing worse for a speculative instrument's price than
an overhang
selling it, and they can't sell it now, and so it can only get worse. So even if some other magical white horse comes and they were going to buy all this, well, whatever price we were going to get pumped from those guys is going to cancel it out by these guys dumping, right? So I hope they don't it's 1.8 billion real money. It's a big sell point, man.
Oh, and the OKX amount, how much is that relatively? How many Bitcoin?
Let's look it up. So if you Google Bitcoin rich list, this is where you can see that 42% of all coins are in 2,000 addresses. You'll find, I have to prove I'm a human. So it should land you on a site called bitinfocharts.com, and it lists you by default the largest wallets that exist in the world. So you can see Huobi's cold wallet has $2.4 billion of Bitcoin in it. Binance's cold wallet, $1 billion of Bitcoin. Coinbase's cold wallet, $1 billion of Bitcoin. Finex, Bittrex, Binance, I don't see OKX's wallet here. That sucks. I see BitMEX, I see Binance, I see Coinbase. I don't see OKX here. I see Kraken, CoinCheck. I don't see OKX. That sucks. Yeah, I don't know what their cold wallet address is. I know it's got billions in it. OKX is the largest exchange that has actual coins in their possession by far. I wish this showed it. But so let's call it, well, let's say it's the same size as Huobi for fun. OKX is bigger than Huobi, but let's say it's the same size. Total 2 billion. So it's about the same order of magnitude that the Mt. Gox coins are.
Yeah.
People are going crazy that Michael Saylor bought 250 million of Bitcoin. Crazy.
Yeah.
And then you've got a 3 billion overhang, you're saying.
Well, yeah, in theory, but like, you know, I think that if OKX never opens withdrawals again, that's bullish because you can't sell what you don't have access to. And I think if Mt. Gox never gives anyone access to those coins and sits tied up in legal forever because of Peter Vincence's lawsuit against him, great, fabulous. People aren't going to get to sell, you know, because I care about the price because that price is going to affect everything else. As long as Bitcoin's more rare and we're trading everything else for it, that's going to pull up everything else. So let's say another thing people are thinking about, the stable coins hurts Bitcoin because you used to have to buy Bitcoin to buy shitcoins. But now you don't need to buy Bitcoin to buy shitcoins anymore.
Yeah.
So
yeah, it was the gateway drug. It was the marijuana, wasn't it? You needed to go through it to get to the other stuff. Now it doesn't. It doesn't happen that way because of we're having this democratization.
you know what you need now? Ethereum. You do need Ethereum because the biggest pairs. It's like Ethereum. Go look at. Oh, let's do this. You'll love this. Go to uniswap.info. You'll love this. And share your screen if you can, so I can see what you're seeing.
Up.
So this is the future. This is what is killing centralized exchanges. This was what has them scared to death because this is where all the volume is, and this is where all of the new coin listings are, and this is where the thickest order books in the world are. So that is the liquidity chart on the left.
I see it.
You went from $100 million a few months ago to $1 billion today.
Yeah.
Yeah, literally beginning of September, 307 million, 2.9, virtually 3 billion today.
Real money. Now that chart includes both sides. That's like the ETH and the other stuff that's there. And since it's a 50-50 ratio, that means there's like 1.5 billion of ETH and like USDC and things like that. So if you look down here on the left, it's going to show you the highest by liquidity. You've got $1 billion of wrapped Ether. You got 300 million of wrapped Bitcoin. There's more wrapped Bitcoin on Ethereum than there is in the Lightning Network by orders of magnitude, 10x, 20x, 30x. Layer 2 scaling for Bitcoin is happening on Ethereum. Layer 2 scaling for Bitcoin is not happening on Lightning, and it's not happening on anything else tied to Bitcoin whatsoever.
On Lightning Network, you don't sound a big fan of Lightning Network. To tear it up or praise it according to however you have.
It has critical vulnerabilities all the time. It just had a new critical vulnerability a week or two ago that if you didn't upgrade your client, you lose money. Like, no, it's garbage. Maybe one day it'll be great. I hope so. But as it is now, it's trash. When it stops being trash, I'll tell you. But currently it's terrible. This works now. Like, why is everyone trying to invent? We have something that already works perfectly now. Why are people trying to do hard things that aren't better? Like, it's crazy to me.
Okay.
So if you click one, so let's go, well, I mean, click page 2 for fun. Page 2. See that colorful one at number 18?
I had a feeling you would ask for that one.
Yeah, why not? So all the liquidity is in the Hex ETH pair. If you put $4 million, $4.2 million of ETH in there, you're going to 4x the price. If you put 400 million or 400 million Hex in there, you're going to drop the price by 75%. That's the math. So if you put ETH in, price goes up. If you put Hex in, price goes down. And it works that way for every single pair. Now, if you look, go ahead and click the pair. Click the Hex ETH pair at the top. Now you can see every single trade and every single trader. So let's click this last guy. See on the left there, it says swap ETH for Hex. Click them. This, see how it says from? Click from. That's the guy's address. Down a little bit.
Where am I? There we go.
The
Yeah,
first long hyperlink. Yeah.
Yeah.
So this is the guy's address. Now this is the trader, and we can tell exactly what this trader is doing. So click tokens there. These are all the tokens he owns.
Which one? Under transactions.
No, you had it. It says token. So he just has what? One? He just has, it's not a drop down? Yeah. Okay. So he has Hex because he bought it. He doesn't have any other tokens. And then you could go, okay, well, where did this guy get his money from? So you see down there where it says in. See how it says in, the blue in at the bottom? That's how he funded this address. So this address bought some Hex on the Uniswap pair. But where did he get the Ethereum from? Well, what other coins does he have? Is this a trader? Is this a long-term guy? Let's trace his money back. So click from on the bottom.
Where are we now? Sorry. Down.
You're almost touching it. So you see the green in? That's when he sent the money into that address. And then he bought Hex with it. So if you go to the left of the in, it says where that money's from.
Yeah.
So let's find out where this guy got his money from. Click it. Looks like that we have a chain. We didn't have an easy one where it's just a guy that holds a bunch of coins. It seems like he's layered it a little bit. Does that make sense to you? So you can keep clicking back. Like go ahead and click that.
Yeah.
Left click it. Oh, here we go. Now here's something. So this is his real wallet, right? This is where money really comes from. Look at all the transactions. We can see he's dealing with what? USDC, stable coin, right?
Yeah.
So click token up at the top there. The drop down.
Where we token, yeah.
See what tokens he's holding. He's probably holding USDC since I see it there.
Yeah.
Right. Okay. So this looks like a Burke account, right? This doesn't look like a whale. So you can go through every single trade and see what other coins people are holding, when they got them, whether they made money or lost money. So like if you look at the tabs up top, it'll even give you an analysis tab that shows you like their equity curve. So you can see whether they made or lost money. These tools are all here. Well, not that far up. Down a little bit. So you see analysis.
Analytics.
Yeah. So we can see when, like, how much money did he have in USD, right? So this address has been going down. This is just one tool. This is Etherscan. There's another tool called Bloxy, Bloxy, that's even more advanced. It'll give you a chart. It'll show you an address, and it'll go, here's all the other addresses it's ever transacted with. And here's and the contracts it runs, here's the functions it usually uses. And then these are the coins he made money on. We might as well look it up. Go to Bloxy, Bloxy.
It's in the browser bar, I am. In the browser.
Yeah. Browser bar, yeah. Bloxy.
Yeah.
.info. Yeah. And so type, let's see. How am I going to give you an address? I don't know. Type a ticker. I don't know. Type ETH. See if it gives us an ETH address. Search it. See if we get anything. No, nothing. All right. Well, we needed to have copy and pasted an address in there. So
yeah, there we go. There's something.
Okay. Yeah. So you could click any address and go through and see everything about a guy's holdings. Maybe how's an easier way to do this? So it's like private investigative work, right?
Yeah.
If you're on a centralized exchange, you see someone bought the price up, you'll never find out anything about that guy. But on these markets, when you see the price move, you can tell who moved it, how they moved it, how much more money they have sitting in their bag. Does that make sense to you?
Yeah, it does. But I'm just wondering how badly I want to be on this exchange so that other people can do this to me.
Well, that's why if you're worried about that, you can hit an anonymity thing like tornado.cash, and then you break the trail, and you always start fresh if you care about that. Or if you go a couple layers, most people just kind of get bored and they stop caring about all those extra layers, right? So let's take a different example, right? So take one of these guys. We had this guy that bought. See this guy?
This fellow up top here, am I in the right place?
It's the Uniswap.info chart you were looking at. It was the purple one. This one, yeah. So if you click, let's click the next guy down. Yeah, click that guy. Hopefully he's more exciting. You click his from address. Yeah. So he's got a balance there. What are his other coins that he's got? See token? We can see what other coins he's holding. So he's got Hex. What else does he got? Okay. So this guy made money on Uniswap. That token was just brought into existence for free. Any of you guys that have ever used Uniswap, get a free $1,200 right now. Did you know that? Did you know that anyone that's ever used Uniswap gets a free $1,200? They gave 250,000 addresses that used Uniswap 400 free Unicoins. Uni is currently worth $2.80. It has been as high as $8. They gave 250,000 addresses in between 1,200 to what, 8 times $3,200?
Yeah.
Insane. And every exchange listed it instantly. It's on Coinbase, it's on Binance, it's on everywhere. Isn't that crazy?
Yeah.
In what other country does that happen where everybody, so like because Hex was 40% of the volume and like the most popular thing on it for months, they gave Hex's users $6, $7, $8 million of money free for nothing, literally nothing. If you tried to run transactions and they failed.
But wouldn't you say that's going to lead to instant selling and people just taking it?
That's right. So go look at the Uni chart and see how it worked out. Go type Uni USD. Or actually, it's there. Actually, it's already in front of you. The Uniswap.info. It's all there. So that Uniswap.info tab. Yeah, if you click back. So this is the Hex pair. Go back. We're going to look at the other pairs. By the way, this is that video I showed you on the homepage. It does this without the dead ends.
Yeah, I think what I'll do is we'll maybe let some of the guys watch that video and then they can go and pick up here, and I'll need to do it as well because I'm...
Check this Uni chart. The price goes up. Well, you want to go daily on it. Click the D. Yeah. Zoom out a bit. It went from nothing to $8 over 2 days and then only dumped ever more.
Yeah.
That's what people do when they get free coins. You know, they think they're going to go, and they think everyone else is going to sell, so they think they better sell first, and it's just a self-feeding loop.
So
I kind of feel like you might get some type of Bitcoin Cash kind of play where you still get another good pump anyway. You know, so the people that bought their bags, they get a little hopium. I would be very surprised if the Uni chart literally just went from nothing to $8 over 2 days and then just died for eternity and didn't have at least one more pump, you know? Yeah. Now, would it get back to $8? It depends on how much the Ethereum's worth that it's trading against, because that's remember how I told you that the Ethereum price moves every other thing trading against it. So all the liquidity, as you see here, the liquidity is all in the Ethereum Uni pair. $42 million of liquidity there, and the next pair only has 170 grand. If you scroll at the top, says name. It's all in the Uni ETH pair. So if ETH pumps, this price chart pumps with it. So it helps a lot that we went from 86 to the 400s. It helps every ERC20 a lot that happened. Yeah, this is the future trading, man. This is the future.
I'm going to send
everybody $1 billion bid side support for Ethereum on any other order book in the world. You won't find it.
Yeah.
I think a lot of people have got to learn, including me, to go pop in and find that liquidity.
How long is that video? Could you click it and just make it show the timestamp on it?
It's 32 minutes.
Okay.
Yeah, it's 32 minutes. That's an easy enough watch. People can watch it at 1.25 speed. So, Richard, we should close up, but give me a couple of 5 top tips that you would give to the crypto guys in terms of this bull market that we're seeing. Your 5, Richard Hart's 5 top tips for a crypto trader to maximize that which he gets out. Let's leave your Hex and all your self-love for your coin, which may well be very virtual, very, very valid, to one side. Everything else.
I've heard enough. You can look into it on the internet.
Yeah,
you don't need to tell you about it anymore.
Your top 5.
So In crypto, there's only two people that really get rich. Founders of exchanges and currencies and
Yeah.
holders. And everyone else is mostly farmed for yield. I think you would agree that almost every trader loses money.
A high percentage, very high, yeah.
Yeah. So if you can find a way, so trading is basically you look at a screen and try and think of very complex and interesting ways to take money from people on the other side of the screen that wish that you didn't get their money. It's not, and the more people that get sucked into that behavior, the less they are building stuff. So yes, I have traded. Yes, I've taken people's money. But if you can build stuff, like you build programs and teach people things and do education and stuff, that has lasting evergreen value. But just jacking some guy on the wrong side of the trade, not as valuable. So if you're going to do that, maybe, I guess, at least be profitable so it's locally good for you. So don't get chopped up, right? Don't multiply the house advantage against you by overtrading. Don't destroy your health. Like, hey, you have more money, but now you have no girlfriend because you can't leave the charts alone. You can't be a human and talk about anything but crypto anymore, right? These types of things.
Yeah.
There's no reason to be wealthy if you lose the things that make having money worthwhile, right? And I'm in there. Like, my life has gotten nothing but worse, and the bank account's got nothing but bigger. But it's, so I need to do health and lifestyle optimization, and hopefully that'll be coming soon.
So if I had to summarize bullet points, number one, retain balance in your life. The pursuit of wealth is important, but not important to the...
If you're healthy.
Yeah, not important to the point of the detriment of many other very critical things that can't be reclaimed. What would be your second point in terms of maximizing during this period?
During a bull run, if you want to try and make a lot of money in a bull run on Bitcoin, you're going to have to leverage up because it's not going to move hundreds of percent. It's not any reasonable time frame. So you're going to have to play things that are lower market cap, and you could play those without leverage. And then if you decide to lever up on those, then you get even more gains, and then you could limit your exposure to risk because you don't need to play with as big a stack because you're dealing with more volatile things that can move lighter. And as long as that liquidity bug doesn't bite you where like you go to sell and there's nothing to sell into, as long as you're scaling in and out, then you know that you got paid, right? Like you locked in your profit, right? So like trading tips, if you have a stop loss, don't move your stop loss. If you're trading on margin exchanges, never get liquidated ever because you're paying a premium to their insurance fund to do that. Liquidate yourself. Always have a stop loss order that executes slightly before your hard liquidation. And then you won't be charged the extra 1% for being liquidated because you'll have executed your own stop loss. And then it may still run bankrupt on the way, but you'll save that money. Never use market orders, always use limit orders. They'll still get executed as market unless you click the post only option.
Yeah.
So the summary of that, there's a lot in there to unpack. So we're just reducing it down to bullets. So we've got number one, retain balance, pursue wealth, but retain balance in all other areas of your life. Number two is be net long in the bull market. Be patient if you're Bitcoin. If you do endeavor into leverage, which I might even roll into point 3, do it very judiciously and make sure that your own orders, that you show skills. Your own orders are the ones that are executed. You don't allow auto liquidations and pay all the unnecessary costs. Don't be a rookie about order implementation and money management.
And understand what high leverage is. Because people have the option to do 100x leverage, they think a reasonable amount of leverage is 5x. It's not. If you're 5x long, you're liquidated in a 20% move. And how often are 20% moves? All the time. So you could be right, but then you get scam wicked out and then you lose money even though you were right. And so you like, I don't think you should play leverage, but if you're going to do it, 0.5x is actually a lot of leverage.
So point number 3.
Not even one.
Point number 3 is understand the destructive capability of true leverage. And in actual fact, even single-digit aspect numbers of leverage in a highly volatile underlying market such as we have are extremely destructive if things don't go to plan. And you can be 9 trades right, 1 trade wrong will take you to 0. And there's no being 9 times right out of 10 easily. You're 1 trade away from complete destruction if you don't understand leverage. 4.
If you short crypto, you're in, like, I know that you play it and I've seen you call for it sometimes. It is so dangerous. Look at the chart. It's like a vertical line on a 10-year chart. It's like a slightly tilted line on a 5-year chart. It's like there's never in the history of mankind been any asset class that has gone ballistic like this. Shorting into that is like short anything else.
So don't short the bull market, and we agree with that. We identified 2 what we felt were bear markets. We're not regular shorters. We did try an ETH short recently, which we got wrong, but we had a stop and we ate what we ate. But generally, that's bull market. It's been decided. Be long in the bull market, basically. I don't think shorting from here on in for a sustained period while we go through reset, stimulus, and everything that's coming is going to be something that we need to do at all. And so, point made. That's number 4. Number 5, and your final point is of wisdom for everyone out there.
Well, I mean, the volume don't matter. The market cap don't matter. What matters is the price chart. And if you're in an industry where 1 million X gains are possible, 10,000 X gains are possible, you might consider finding something that's got product market fit and just holding it and not getting shaken out. And not trying to time, because when you try and time, sometimes you're trying to chase, and then you finally chase and you get back in at your paper cut, and then it dumps. You're like, oh, I was right, and then you sell to buy. Like, how many people have outperformed buy and hold on Ethereum or Bitcoin? Even the crap that we don't think is impressive right now is actually very impressive if you bought it early. So if you bought Litecoin early, it ain't cool now, but it sure went up. If you bought EOS early, it ain't cool now, but it sure went up. So, buying and holding things that are rather early, man, I don't know how else you can get those numbers.
And so if I can supplement that point, you buy and hold investing is going to serve most people right in the absence of real method and being totally sharp, very rare trading, selective. We call it active investing almost. And buy and hold. And possibly from our analysis of the top 10, Ethereum buy and hold for most people for the next 3 to 5 years as we play out in a bull run with virtually no leverage, maybe investment in a small account with 2x.
How long do you think the bull run is going to go this time? Do we going to get it? I mean, the chart shows elongated cycles.
Unlike all the super...
elongated bull run?
Yeah, unlike all the other very mega hype guys that are just going million and 250,000, we like geometry and charting, and we can only go as far as that geometry and charting indicates. That doesn't mean there isn't overperformance, because otherwise Bitcoin would never have made new highs. But our overall expectation for Bitcoin is out of this current structure around $27,000 on this macro continuation.
It seems very conservative and achievable. That's a totally reasonable target.
Yeah, and actually, in terms of time frames, I don't think forecasting beyond 6 months in itself is quite a stretch, but you can maintain some degree of range accuracy. For people that are forecasting $1 million in 2025, I think it's a little bit of McAfee-dom.
He's making up shit.
Yeah. And that's clickbait.
Likes and retweets.
Yeah,
We're the 1%. If you understand this, we're going to $1 million. Like everybody just brainless hate that.
It's headline clickbaity type stuff, and we try avoid that. We do see overperformance because this is structurally like the ETH setup that we discussed. that had a very big pump into its ICO. We see the potential for that for Bitcoin, but we have a method for getting out. And it's kind of, we put on an expansion sleeve, which has a top end and a bottom end. It's part of our methodology. It's called an overperformance band. So we'll close.
Actually,
You can just close half at the target and then leave some to run, right?
Yeah, that's right. We'll close a reasonable amount. I'm not sure I'd go as far as half. I think I'm that optimistic that I'll probably, but there's a lot to be said, especially if there's a leverage involved to even moderate, very light moderate, like you were saying, the single digit stuff. If you're on 3x, there's a lot to be said to going back down to just for every one Bitcoin, you've only got 2 in total, leverage to 1, taking it right down to simpleton. And then you don't watch the screens, you don't watch the chart. There's no emotionality. And that goes back to your point 1. You still have your girlfriend, your golf handicap hasn't dropped off, you still have a mate. And actually, the screen generally is good news. And the amount of events that would have scared you that you end up missing, and then you sit through and then it goes back up. And because you weren't on critical leverage, but you had literally, if I've got 10 Bitcoin, I've got a position of 15 or 20 in total, of which I'm well over liquided. That will serve you exceedingly well. And we're kind of driving people towards the top end, the Bitcoin and the Ethereum ourselves generally, because that's where technically we're seeing the optimism. And there might be the odd shooting star and a couple of the coins that you might not have seen too much love for, but have a few moments. I don't think you should hang up on the day-to-day and having a few moments. I think if you've got fundamentally right and you've got the macro technical right, you don't have to be number one every time on the daily top of the pops. That's going to be the kind of narrative that we play. But you don't underestimate the multiple that will give you by having some semblance of timing as well. So you can do better than the hodl, although most people don't. But you got to do it with...
In a bull run, everyone's a genius because you can be you can be low leverage long anything and you're not getting liquidated and it's beautiful. But then if you don't get out on time and you don't know when the blow off top is, and the dip keeps dipping and you're like, oh, we can keep going down. And by the way, if you can't sleep anymore, you're over leveraged.
Absolutely. If you're looking at your device in the bed and all of that. Yeah, awesome. Thank you very much.
I enjoyed the talk.
Yeah, it's been a good one. We've gone on for very long. We'll have to serialize this, but that's great. There's been some interesting stuff. Thank you for what you do. Thank you for the fact that you actually put out a lot of points that protect people. I wish you luck with your own token. I try avoid ever endorsing tokens myself where I don't fully understand, and I would still say I'm in a lack of understanding. But if you continue to get support for your token and that remains technically significant and after a sustained period, it is holding value, that is always impressive for me. I always note the new listing coins, they have a little bit extra in the back pocket to keep it a little bit hyped, but after enough time, they're often shown up. So something
because they don't have product market fit. They just have the hype. The people buy it because it went up, and then when it starts going, they sell it because it went down. So that's why you get over and over again. Look at the Dogecoin chart.
Yeah.
Hilarious.
So
I'll be watching with interest how Hex goes. Thanks for that. Thank you for coming on and
I'll make one comment.
Yeah.
If you believe in the long-term value of things, how could you get people to prove that they have long-term value? Lock up their money so they can never spend it. And if the average lock length is 4.5 years, I don't know what more you could ask for a human to do to prove that they believe. Now, that doesn't mean people will continue to do that forever. But for the people that are here, we're going to be here for a long time. That's it.
Yeah, makes sense to me. Richard Hart, thank you very much for your time. And all the best, and I'm sure we'll speak soon.
Thanks.
Bye-bye.
Ciao.